All right, guys. Good morning. Good morning. Hope you guys are well today. All right, so yeah, today we have the PCE deflator dropping. Market absolutely flew yesterday. It's really surprising how much the market went up yesterday, to be honest. Market flew. Yeah. Today we have PCE deflator and then jobless claims as well at 8:30. I don't know if the market's done tanking or not. All I can really say is that we're up huge yesterday. Nobody knows. I mean, of course, like, y'all really have to understand my bias, bro. Like, I get so many people here when the market starts to fall or when the market goes up and they're just in disbelief, you know? And so at a certain point, you know, I don't know, the market's up a lot, like a lot, you know? And so with that, I don't know. I hope it's done. You know? Like, I hope it's done and it's up, but I don't know. What's up, John? SPY up to 407s. Yeah, I made some nice gains too, to be honest. Like, I made some really nice gains. Yeah, it's cold in Texas too. You guys see me. Y'all can see me dressed up this morning, man. It's cold. Ironically, the only thing not flying up doing all this craziness is like AMC. You know, AMC's just not moving up like a lot of people want it to. But you see the dollar index all the way down to 105s, which is great. I don't know. We'll see, Slew. Yeah, we got jobless claims. PCE deflators today, which is actually probably a little bit larger than the jobless claims report, to be honest. So yeah, today it's not just jobless claims. We get the PCE deflator, which is a pretty big release. We're going to have a lot of people here. At least we usually do. We get thousands of people here at 8:30, usually. Not always. I mean, yesterday we did do we did GDP yesterday. We did the Jerome Powell press conference. We had thousands of people here. We had like 3,000 to 4,000 people here live. And so today will probably be something like that. I don't know if it'll be 3 to 4. It might be it'll be a couple thousand, I'm guessing, here for the PCE release at 8:30. Expectations for PCE right now are for .3% for the core PCE price index month over month. That's the big one too. It's the core PCE month over month one. Yeah, we made a bunch of money yesterday. If you guys watch the stream, you can kind of see me scaling out of some of my long positions. We're still in Disney right now, though. And to get another really nice dip buy on Disney, man. Like, look at my Disney trades, bro. Like, watch how accurate I am. Like, I don't think I've lost money in months on Disney swing trading. And I've done it. I've swing traded it a lot. Like, look, I'll show my trades. And I'm still holding some shares right now. But like, yeah, you see me start to scale in at 94s, 95s. You zoom back here. I started to scale at 96, really. Keep scrolling back. A little bit too extended for me up here. And you can see the other trade we got in at 93s, 92s. Sold it at 99s, 100s. Cut it. Keep going back here. We can go back a while, 180 days if you want. Look at all this. Look how much I've traded Disney. These are my Disney trades over a 180-day period. And honestly, we've made a lot of money on Disney. Thousands over the last month or two, really. Yeah. But yeah, here's my Disney trades. You see, the way I trade is pretty simple here. I've been making money on the long side. You see, I get in at 112.30s, 112s. I sell at 113s. That's one green trade. Buy at 111s. Sell some more at 115s, 113s. Add back at 110s, 112s. Sell at 113s and 112s. Add back at 109s and 108s, 107s. Sell again at high 108s, 109s and 108. Roughly start adding back a big position at 104s, 100s, 98s, 96s, and then start unloading at 100 once we get a good average. That was a little sketchy of a trade, but we got out profitable, as you can see. Start scaling back in at 91 and 93s, take some off at 96 and 97s, and then the last at 100. A little bit more at 103, it looks like. Start adding back in at 88s, 87s, 93s, sell at 89 and 90s, hold it, started adding back at 92s and 91s, sell at 100 and 99s, and that was recently. And then the last one here, we added at 96, 94s, and low 94s. We took a lot off yesterday on the pop at 95s and 96s, and then we're still holding a little bit at 97s here. So you can see all of my swing trades for Disney over the last 6 months or so. And honestly, they've all been green. I don't think I've gotten out of one red trade on Disney in the last 6 months or so. So we'll take it. Like I said, I'm not saying I'm going to be able to continue to do that, but yeah, it's been pretty profitable for me over there at Disney. Disney's one of my big beliefs. Like I love Disney, and I need a haircut right now. Disney's one of those ones that I believe like it's just easy to pay. It's easy to get into nice little buy zone. And scale in, and if you have a large enough account, you can just kind of sit. All right. Yeah, I've never used Street Smart Edge. How is it? Never used it. I know Schwab has 0 commissions. But yeah, we're still holding a little bit of Disney. We're up like $50 on the last little bit. You can see this here, 15 shares, very small, but still holding. And we I can't remember how many shares we bought. Looks like we bought about 60 or 70. We made some money on Amazon too. We cut Amazon as well. Again, I can show you my Amazon trades too. Let's look at them. Here's Amazon. Started scaling in Amazon at 92s, 91s, 92s. Started taking it off at high 92s, 93s. Took a little bit more off at 92.60s. Took a little bit more off at 94s. That was the last little bit. I could have held that one a little bit longer too. But if you zoom back, I trade Amazon a lot as well. Look, start scaling in at 93s. Take off at 94s, 95s. I keep scrolling back too. You can kind of see a lot of this over time. There's a 90-day chart on Amazon. Buy at 130s. So that was a little day trade, it looks like. I didn't really start trading Amazon again. Was this a swing trade that I lost money on? I don't know. No. Okay, this was me shorting it. Okay, this was me shorting Amazon. Alright, so a little short. And then I start buying up at 91s, take some off at 91s, add back at 93s, take off at 94s, add back at 92s, take it off at 93s. That was recently. Do the same thing with Google. I mean, the trading strategy works the same with all large caps for the most part. As long as I believe in the company, I'll trade it the same. But the chart on Google looks very similar as well, I'm sure, to be honest. Honestly, my whole family's been sick for the last 3 weeks. So like my whole family's had the flu, strep. My son had the strep and flu simultaneously. Just got better. But he was sick for like 3 weeks. He had the strep and flu simultaneously. Only just now got better. My mother-in-law has the flu. My mom just got better from the flu. Flu A's going around like crazy here. It's not PPI, it's PCE. It's the PCE deflator is It's core PCE is really what you want to look at, by the way. 0.3% is what they're expecting here. It's the core personal consumption expenditure. It measures the changes in the price of goods and services purchased by consumers for the purpose of consumption, excluding food and energy, which is why it's core. PCE is chain weighted and adjusts to changing consumer behavior. Core PCE is what the Fed looks at to determine interest rate hikes and inflation. And you could hear the Fed talk about PCE yesterday. So I think a lot of people are front loading into this because the Fed said some favorable things regarding PCE yesterday. And so I think a lot of people are expecting the PCE to come in positive, which would be below 0.3% for core PCE. Year over year is expected to come in at 5%. Jobless claims are expected to come in at 235,000. Continuing claims are expected to come in at 1.573 million. Personal spending numbers come out at 830 as well, expected to come out at 0.8%. Again, less is more with all of this stuff, except for jobless claims. Jobless claims is more is more, you know. Probably trunk. I don't know about a massive one, but we'll probably get a sell-off. Yeah, PCE is a pretty big reaction to the market. Any good blue chip stocks that are a buy right now? Not in my opinion. Everything's pretty extended for me to buy stuff up right now. I need big drops to buy stuff, and we just don't have any big drops right now. So I need like a big drop to buy something, and we just don't have it. We got jobless claims, PCE, personal consumption, and spending. Yeah, so a lot of stuff's dropping today. We got jobless claims, core PCE, which is the big one. Core PCE deflator is the big one that drops today. We're going to do a poll right now regarding that actually as well here. So we're going to do this poll. We're going to do a poll. Yeah, we're going to do a poll. Let me know. Uh, 8:30 is when they drop. We're going to do a Twitter poll also. All right, guys, the Dixie coming down some. SPY still moving up. The previous closing price, so we're technically a little bit red, but we're up so much from yesterday that it's insignificant. The previous closing price for the SPY right now is right around 407.60. So 407.60 is the previous closing level. It's the level at which the market goes from red to green and green to red on the day. And so with that, like I said, man, we'll see if we get it anything better or more favorable right now. but I don't know if we're going to. Now it's hot. I'll be right back. 8:30 Eastern Standard Time is when they drop, guys. Vote on the poll. Let me know what you guys think. We'll also put the numbers up on the screen. There you go. All right, guys. And again, let me know what you guys like right now. Let me know what you guys are watching here. All right, guys. So yeah, SPY at 407s right now. 407s. $8:30 Eastern Standard Time is when the data comes out. All right, we're at 105.48s for the Dixie. 105.48s. Amazon at 96. SPY at 407s. If PCE is meets expectations, it's considered neutral. It will be considered neutral. We also get to pick who wins the PlayStation or Xbox today. Yeah, so I don't know. There's a few ways you could look at the market today, right? Number one is that we're kind of extended from yesterday, in my opinion. I think we're up just a little bit too much relative to what's really going on in the market. I said this before and I'll say it again. The reason we're up yesterday, the reason we're up so much is because Jerome Powell basically said that they're going to start easing rate hikes. Now, we're still going to be raising rates, but they're going to start easing into it. And his plan for combating inflation longer term is to ease the rate hikes, but keep them somewhat profound still, so that we're taking a long-term approach. Instead of just ripping the Band-Aid off, giving a super big rate hike, and then just crashing the market, and then having to play cleanup after that. And this is basically what he said. Instead, they're going to slow the pace of rate hikes, but still keep them somewhat significant, conventionally speaking, so that we can slowly chip away at inflation long term. And he said he thinks that makes a lot more sense than just kind of ripping the Band-Aid off and putting a huge rate hike out there. And huge is relative. Some people would consider 75 basis points, like we've been doing, huge. But his point was that they're going to start slowing it down and then, start chipping away at inflation that way. And that caused a lot of bullish action here. Of course, the bears panicked. Everybody's saying, bears resorted to calling people names like they do. And again, I'm not saying anybody's right or wrong. I really don't know yet. But that's why the market ripped up yesterday. And so again, but at the same time, though, here's my honest take. And I talked about this yesterday during the stream. Here's my honest opinion. All right. I don't think Jerome Powell wants a market crash under his watch. Right. So it makes sense that under his term, he would rather do slow and steady than big potential drop in markets like a lot of people thought we would. Now, whether that's the most effective option is arguable. I think a lot of people think ripping the Band-Aid off and just kind of getting it over with would be the more effective option. At the same time, though, a lot of those people have short positions, and so I'm not going to say they're the most objective. But yeah, I don't think he wants to crash under his term, and so with that, I think he's going to do it this way so it looks better for him. And I get it, I understand, I guess, and obviously that's better for short-term markets because the markets absolutely flew up. But at the same time, I think we might be a little bit extended going into today. But it all is going to be relative to what happens during the PCE and jobless claims release at 8:30 today, which we will stream live. Hit the subscribe button. But yeah, that's kind of the nuance of what's going on in the market right now. Again, I'm not saying I agree with any of that. I'm just saying that's probably why he's doing what he's doing. Should I take a little bit more off of my Disney trade? I think I probably should. I'm going to take just another 5 shares off, of, which is about 30% of my position. I can't even trade yet. I got to wait 20 minutes to trade. Hey, what's up, Daniel? Bill Ackman. Honestly, Bill Ackman might have to get bumped down from the spot. If he's all about SBF and FTX and he thinks they did a great job, then I might have to bump I might have to bump Bill Ackman down from, top 2 trader to like top 4. I might move myself up to top 2. Top 2 greatest traders of the world right now, beginner trading, It was Warren Buffett, Bill Ackman, John, beginner trading, and that should be everybody's list. If it's not, you should be ashamed of yourself, okay? After this latest SBF comments, I think I'm going to bump Bill Ackman down, I respected his work against Herbalife. You guys know how much I hate pyramid schemes, and so I respected his work against them. But I think Sam Bankman-Fried was obviously super sketchy. I don't care how much accountability he has right now. He's just trying to damage control. Let's be real here for a second. He's just damage controlling it. Like, he has to say these things or everybody will just hate him even more. And so does it mean anything? No. Like, absolutely ridiculous. The dude lost billions of dollars, Like, now he's okay because he said he was sorry. Like, what? Like, y'all get these guys out of here, man. Booger. Yeah, I remember Revenge of the Nerds. Great movie, man. I love Revenge of the Nerds. Yeah, that's what a lot of people like. People are like, I don't know. Yeah, man, that's kind of crazy, to be honest here. Yeah, I mean, I don't understand this take. Everybody's just going to forgive Sam Bankman-Fried because he said he was sorry. Like, what are y'all talking about? The dude lost billions of dollars, bro. He gambled with people's money. You know, and I never had a penny in FTX. I never put a penny into FTX. I didn't lose a dime from FTX's downfall. You know what I mean? So I'm sure the people who lost their life savings feel even more strongly about this than I do. It's just ridiculous. Like, come on now. Like, it kind of shows how gullible people are out here. Like, oh, I'm sorry, guys. I made a mistake. Oh, it's okay, Sam. You know, what? There's got to be some other nuances to this that I just don't understand here. And that's possible. Yeah. Yeah, just odd, man. It's just odd. Yeah, because him leaving Twitter definitely means that. Doug. You know. All right, so yeah, also some good news is that Apple came out saying that there was a misunderstanding about Twitter being removed from the App Store. Tim was very clear that Apple never even considered this. Okay, well, that's good news, I guess. I might disagree with Elon, but I think blocking Twitter or removing it from the App Store is kind of excessive, you know? I mean, I disagree a lot about what he says, to be honest, but like, all right, guys, so the SPY at 407 is here. Let's see if we actually hold. Everyone gets a voice. Yeah, that's what I'm saying. That's what I said. I said I might disagree with what Elon says, and I'm allowed to do that, of course. But like, I'm not for him getting removed from Twitter. You know, I'm not for him having Twitter delisted from the App Store or anything like that. I'm against that completely. Is what I'm saying. You know, I thought that was pretty obvious, but you know. What do you guys think we do today? Green or red? Guys, green or red? This is getting way too political for me. Yeah, let's move on from Twitter arguments. Man, that Jerome Powell stream was chaos, bro. Honestly, there's so much emotion floating around during that Jerome Powell speech, bro. It was absolute chaos. It would be something like, "Hey, the market's ripping up huge, hundreds of points," and then people would be like, "Nuh-uh, you bulls are dumb," you know. And then the market would keep going up, and everybody would be like, "Ha ha." And then it would just kind of rinse and repeat that over and over again for like 2 hours. That's basically what the stream looked like during that release, because the bears were big mad, dude. Bears are saying this is not gonna hold. They would say this little bounce after we started to rip up, they would say, "Hey, this little bounce is not gonna hold," and then it would keep going up. And then they'd say, "Oh wow, this doesn't make sense," and then it would keep going up. And then they would start calling names, you know. And I'm not saying I'm laughing at bears' tears. I would never do that, but like, you know, they were obviously wrong. Yeah, I don't know. Hey, good morning. I think this rally is really a bear trap. Honestly, maybe another week of green, then boom. Maybe, bro. Hey, we'll see. Again, I hope you're wrong, but it's certainly possible. I'm not saying it's not going to happen. It might happen. I don't know. Again, though, I think we got a lot of optimistic signs, man. And I think where bears got caught here is a lot of them thought that Jerome Powell would continue to be aggressive, and some thought that he would be more aggressive moving forward with his rate hikes. During the speech yesterday, we actually found out that he's planning on easing the rate hikes. That's what he said. He said that they don't want to crash the economy and play keep up, that they're going to instead ease into the rate hikes, keep them substantial enough to do some damage to inflation, but not crash the market and play cleanup from it. And so in that regard, you know, the December 14th rate hike decision will be interesting. I think a lot of people are front loading into that decision now. And I think that's why we're seeing the market rip up, is because people are entering ahead of that. They understand that we might do 50 basis points. We might do less than that, I guess, now. And if that happens, then, of course, the market's going to go up. At the same time, though, this does set us up for a potential brash reaction if we do anything outside of that. If we do 100 or something crazy, the market's going to drop, you know. And so we'll see what we get. But that's kind of what happened yesterday. Not on TOS. You got to wait until 7 a.m. IM. You got to wait till 7 a.m. Yeah. I mean, I understand bears still wanting the market to drop, and I get it. Yeah, I mean, nobody thought they were going to disappear, though, Omar. That's not what this is. This is more so, this is Jerome Powell saying that they're not going to be more aggressive. They're going to be less aggressive in terms of rate hikes. They're still going to be aggressive. They're still going to raise rates to combat inflation. And inflation is still conventionally really high. You know, like relative to convention, we're still really high in terms of inflation, of course. But what he said was that they were going to start slowing down in their rate hikes, which a lot of people thought they were going to get more and more aggressive into next year. But instead, he basically said the opposite, which is that they were going to start slowing down their rate hikes. That's why the market flew up like it did yesterday. And again, I get bears don't want to look at that objectively sometimes, and I understand it. But like that's why the market ripped up yesterday, because that's essentially what he said. And again, I don't know what the market's going to do. The market might crash. The market might run up. I really don't know, but we'll see. We're at 407.20s for the SPY. No, he's not going to do 100 next time. He'll probably do 50, I'm guessing. No? My guess is he'll do 50. Again, I'm not saying I agree or disagree. I'm just saying why the market went up yesterday, because that's really why the market went up yesterday. Should I buy anything today? I mean, everything's a little bit too extended for me right now, man. Everything's too high. Like again, I think we might be a little bit extended on the upside at this point in time. All right, guys. SPY at 407.20s, 407.20. This is Dixie's at 105. So still dropping down a little bit. Amazon popping up some. What's Google at right now? What's Snapchat? Snapchat at 1020s. AMC obviously hasn't really done much. I think Aapl ripped up, didn't it? Yeah, so Aapl all the way back up to $1 here. Disney at 97.70s. So we're still watching that too. What's up, Lowry? I guess 8:30 is when the tradings will start. Well, yeah, I mean, 8:30 is when. What's Bitcoin doing? I'm assuming Bitcoin is doing pretty well, right? Let me see. I'm assuming Bitcoin's got to be doing well right now and all this stuff, right? All right, so let's take a look. Bitcoin US dollar. All right, so Bitcoin at 17.1. Hey, man, I hope Bitcoin's back, bro. Coin holding around 45s. Ape was a failure. Yeah. What do you guys think, man? Wow. So yeah, the Jerome Powell meeting was absolutely crazy here. All right, guys. So market's starting to pump up again. We're at the point now where it's kind of hard for me to buy anything right now. I think we're just a little bit too extended on the upside short term. Now, it doesn't mean that we're not going to move up from that long term, but we're kind of outside my buy zones, so to speak. PCE drops. PCE drops 8:30 Eastern Standard Time. Who, Kevin? RMED. Yeah, there is a chat on Discord, bro. Isn't there? Or y'all be surprised that can you summarize what PCE means? It's the personal consumption expenditures is what it really is. So what the PCE really is a deeper look into inflation. The big one is core PCE, right? So core PCE is the one that everybody's going to be paying attention to. It measures the change in the prices of goods and services purchased by consumers for consumption, excluding food and energy. Right, incredibly important level. It's if you listen to JP speak yesterday, he referenced this specific metric many times because this is the biggest one that they look at, which is the PCE deflator, is what it's called. All right, let's do a Twitter poll as well. All right, so the core PCE deflator drops at 8:30. Bullish or bearish? We also did a poll on Twitter. All right, guys. What else we got? We got the SPY moving. Huge. Do you think we hold these gains? Is I guess one of the real questions here. Do you think we hold these gains? That's the real question. Do we hold these actual gains here? How long we got? We got about 3 hours. Like, do we actually hold these gains? Also, do me a favor, hit the like button as you're here, guys. We appreciate it. Hit the like button if you haven't already. You know you want to. Try one time. I feel good. Do it now. Vote on the poll on Twitter. We got a poll going on. Yeah, I mean, look, there's nothing against our Discord. Like, it's not that I'm not trying to build my Discord up. It's that of course, other people might have really active Discords, and I understand. You know, I think it depends on where the focus is. Like, my focus is on my YouTube channel. You know what I mean? And I think the YouTube channel, like the views we get on this channel, especially during these big economic releases, are, you know, pretty high. And so I think if you spend too much time building your Discord like that, it's going to take some attention away from your actual YouTube channel, you know? And so in that regard, I want to build my Discord, but it's not the top priority. I want to build my YouTube channel first, you know? And then the Discord channel will grow in turn from that. We got thousands of people on Discord. It's just, like I said, honestly, Discord can just be stressful. Like, we got a lot of people that chat. It's just a way, if people want to get in touch with me, they can holler at me on there, you know? But it's also like Discord, there's just so many bots on Discord. Pawn does a great job of helping me run it, though. Pawn does a really good job of helping me run it. And it's kind of fun to talk about like sports and stuff with everybody there. If you guys want to join our Discord, here's the link. Check it out. You trade silver? No. Sell courses? Bro, you'd be surprised at how many people, like, I have had so many people email me, message me, trying to work with me on selling courses. Right? So many people, you know, from all across the industry. Some people are cool. They're not all bad. Some of them are just trying to work with me, right? So they're not all bad. It's not like I dislike all of them. But I get so many people saying, hey, John, like, let's build courses. And it's like, I get it, man. I get it. The real money's in courses. Like, the true, like, listen, if I wanted to, with the size of my following, and not just that, like, with how many views we get during these big releases. Like, yesterday, Jerome Powell, we had, like, almost 4,000 people there simultaneously, right? We got like 15,000 views total. This channel averages about 10,000 clicks a day, right? With those views, we could sell courses, and I could make millions doing it. I really could. To be honest, I can make millions doing it, but I choose not to because I've been saying this for years, and I'm going to keep saying it, is that I just want to be a free resource. Like, I just want to have, like, I don't want to have paywalls behind my content. It would certainly be more profitable for me to sell courses, you know? And of course, like, the haters are going to say, oh, this dude couldn't sell courses. Bro, I promise you, with how many viewers I get, I can definitely sell courses. Still, I don't feel the need to, because number one, we make good money without selling courses. Number two is that I'm going to back myself in a corner, and I kind of have at this point, where I told you guys I would never sell courses. I told you guys there would never be paywalls behind my content, and I'm going to keep it that way. And so I hope you guys appreciate it, because I probably could be making money selling courses. All right, guys. 8:30 Eastern Standard Time. Yeah. Hey, what's up? What's up, Haas? Hey, what's up, man? All right, guys. Disney up to 97.70s, man. I'm still holding a little piece of this. Again, we've been riding this thing up for a while. Yeah. Yeah. What's up, Chris? Hey, thank you, Raul. Yeah. I saw some people getting mad at me, Kevin, for having a DUI, but, like, y'all give that man some privacy, bro. Like, we've all made mistakes. I certainly have, you know? And so, let the man live, man. You know? Leave the man alone. Like, it's not in if he got a DUI, it's not relevant to you. You know? Like, leave him alone. But yeah, I don't know what the whole talk. We have the Dixie breaking down, so the dollar index is looking weak here, which is great. This is honestly what we want to see. Ideally, we'd see the dollar index drop, you know, under 100. But this is great. We want to see the dollar drop right now, especially with all the craziness. Good news for Tesla, I'm sure. Tesla should be back up some too after the Aapl thing, where they said, yeah. So Tesla all the way up to almost 200 again, man. Disney at 97.70s. Amazon sitting right now at 96s. Disney at 97.70. So we made a bunch of money. Let me see how much money I've made in the last few days here. I want to make sure it's the right amount. All right, guys, so we're up to 105.40s, 105.40. SPY at 407s. Here we got Disney at 97.75. Yeah, I'm not mad about a DUI, bro. You know, I've never got one. I've never had a DUI or DWI. I'm not a huge drinker, though, to be honest. Like, I've never been a big drinker. You know, I'm not saying you know, yeah, I'm just saying I've never been a big drinker. Nothing morally against it, of course. Just haven't been a big drinker. All right, guys. SPY at 407.20s. All right, guys, at 407.20s. I think the bears will aggressively show up today, considering the crucial resistance. Yeah, I think we might be a little extended on the upside. I can kind of agree with that. I think we might be, I think we might be a little bit high up here. Again, I'm not sure if we're going to hold. Like I said, I think what Jerome Powell said yesterday was good, but I don't know if it was justifiable to cause this huge run up. So now Pomp is talking to Jake Paul. All right, guys. So SPY at 407. It's kind of neutral. Again, in about hour and 12 minutes, we get the PCE deflator drop, which is going to be the big data. Jobless claims numbers are expected to come out as well. We do have forecast for the PCE at 0.3% is what they're expecting. 0.3%. Now, again, we'll see if we actually show up there. Right now, the market is incredibly extended on the upside. I think a lot of people are probably waiting for this data to be released here. All right, so jobless claim expectations. Jobless claims are expected to show up at 235K. We're going to put this number on screen as well. Here is the expectational numbers here. Higher would indicate higher inflation. Like I said, that is kind of what we're looking at right now. PC is going to be the big one here. What's up, Pawn? Honestly, bro, I realize why people like golf as they get older. I figured it out. Okay, I figured out why people like golf when they get older. Let me explain. When you're young, I mean, now there's some youngsters that like golf. I'm not knocking golf. If you're good at golf, do your thing. Jack likes golf. My son likes playing golf. But I figured out why the older population likes golf is because it's the sport where you have to be the least athletic. You know, now before you get mad, golfers, what I'm saying is that usually with sports, right, in professional sports specifically, you have a ceiling of age that once you're over like 30, 35, you're not going to be a professional sports player, you know, in anything incredibly athletic, that is, right? Golf is different. You know, you could be a really good golf. You could become a professional golf player at 45, 50, you know, and a lot have done it. And so in that regard, people play athletic sports when they're young. And then when they're starting to get of age where, you know, they're hitting 30s, 40s, and they're just less athletic, they can't do as much stuff anymore because their bones hurt, you know, so to speak. Then what do? They pivot to golf. It makes sense. Honestly, I might be playing golf. I like playing sports, and I'm getting old. Maybe I'll try golf. I got a golf course right down the street from me. Let me know are you a golfer, guys? I've never even watched golf. I know nothing about it. I know how to play. I played it before, like 10 years ago. But that's my theory. Hey, thank you, Jeremy. I appreciate it, man. All good. Yeah, pool as well. I think pool is more of like a drinking sport, though, you know. Where it's like you go to the bar and play pool. Yeah, that makes sense, and Cal, 100%. I can agree with that. Are you a full-time trader? No. Do I live off of my trading profits only? No. I mean, we made money last year in trading. We made we made some money, but do I live completely off of that money? No. So wait, is Anthony Pompliano just kind of pivoting away from stocks now? He's interviewing Jake Paul at this point. He doesn't want to talk about crypto, I'm guessing, right now. He's getting too much crypto heat. Listen, I like it, Pomp. He's cool. But it's kind of obvious. You know? It's like, hey, let's not talk about crypto right now. Let's interview all these other random people. My guy hasn't said a word about crypto in like weeks. All right, guys, jobless claims numbers coming out today. We'll see if we get something good here today. Let me know what you guys think will show up as. Again, we got the expectations at the bottom here. Hopefully we'll do something positive for this. Data comes out in about an hour for PCE numbers. And these are big numbers, relevant, important numbers for sure. Yeah, man. Honestly, I'm so shocked at how everybody's treating Sam Bankman-Fried. It's kind of crazy, bro. Like, oh, I'm sorry, guys. Everybody applaud Sam. Like, I've never seen, like, okay. How is Elon Musk getting attacked so much? Serious question. I disagree with a lot of what Elon says. But people are talking about banning him from Twitter, you know. While Sam Bankman-Fried, a dude that just openly stole billions of dollars from people, is getting applauded by billionaires. What? Like, we really are in backwards land, man. It's crazy. Honestly, it's just crazy. I don't know how else to explain it. It's legitimately crazy, you know. I saw Bill Ackman, who I always joke is one of the top 3 traders in the world. Bill Ackman said, "I believe Sam," and and then Kevin O'Leary says, "Yeah, the kid's telling the truth." It's like, what? This dude stole billions of dollars from people, guys. Come on now. Like, look at it objectively, you know? The dude was gambling with people's money, clearly, with people's funds. You know, people lost billions of dollars from this guy. I don't know. I have no sympathy for Sam. You know, dude tried to rule the world and got caught, and now he's trying to say sorry. Like that justifies forgiving him. I don't know. Maybe I'm just biased because I saw a lot of people lost a lot of money in crypto. And luckily I didn't. Like I said, I didn't have a penny in FTX. Never deposited a cent into FTX. Never promoted FTX. Never used FTX, to be honest. The only way I really even knew about FTX was because of the crypto space, and I watch baseball, and they're on they're on the umpire shirts, you know. And I also watch the UFC, and it's in the UFC. They were paying the UFC to advertise for it as well, but it's just kind of crazy. It's excessive, you know. Yeah, if you want to see the Sam Bankman-Fried, let me find it. Yeah. Bro, I never thought Martha Stewart should go to jail, bro. Yeah, that's the crazy thing. Martha Stewart goes to jail. Sam is fine. He's still doing interviews with big news corporations. You know? Oh yeah, for sure. There's definitely risk in sitting in crypto. Like I said, I never deposited a penny into FTX, and I've been pretty flat in crypto for the last couple, months, to be honest. Sam Bankman-Fried said, quote, "I made a lot of mistakes, but I never tried to commit fraud," end quote. I don't know about that, bro. You might have never tried to, or yeah, you did, bro. Come on now. Like, you knew what you were doing, man. Like, you weren't, like, come on now. I don't know. I just don't have any sympathy for that dude. Anyways, SPY up to 407.30s here. We got Disney at 97.70s. We got Dixie at 105.30s. All right, so looking at our polls here for PCE, we also have jobless claims. So we have PCE and jobless claims releasing at the exact same time, right? And so this is going to be actually a pretty volatile move in the market, in my opinion. I don't know how much we're going to go up or down. I think we might be, it's arguable that we're extended on the upside. It really is. I mean, we ripped up kind of crazy big yesterday. Do you guys think we'll hold these gains is the real question here. I'm not really sure. We ripped up big yesterday. We went from 394s all the way to 407s, 408s, almost 409s. That's a big bounce, a big rip. And honestly, the market's not looking that bad. I mean, listen, we still got a long way to go to be green on the year. You know, we start breaking 460s. We're at about 410s, a little bit under 410s. We start breaking 460s. We're going to be green on the year. And again, the reason we ripped up is because Jerome Powell did say that they were going to start easing the rate hikes. He said that he would prefer slow and steady rate hikes as opposed to just big, aggressive Band-Aid rips in terms of like doing really aggressive rate hikes and then cleaning up the crash afterwards. He said he'd prefer not to do that. And if I'm looking at it objectively, I know he doesn't want to crash under his term. That's an understandable thing. Which one's going to be the more there is arguments saying that it'd be more effective for him to actually just rip the band-aid off though and just kind of get it over with and get the big extensive rate hikes out the way. And we're also going to have some people that say that what we're currently in is extensive rate hikes. Conventionally, that's true. Like relative to convention, we're raising rates aggressively. But I think a lot of people thought that we would raise rates more moving forward. They thought that we were going to be even more aggressive than we have been, and they thought that's what was going to happen in December. And so when Jerome Powell basically came out saying that they were going to start easing into it over time, and then that caused this big bull response in markets here. We're still technically red in pre-market, but you can see the previous closing price up here that we're approaching right now. So we're getting pretty close to this previous close. It's right there. And yeah, we'll see if we break it. Looking at our polls here, we asked people, again, we do have jobless claims numbers today, and we have PCE deflator. PCE is a big metric that drops. It's a big metric. A lot of people watch it. It's pretty relevant. That drops today. Again, expectations for PCE are for 0.3%. 0.3% higher than that would indicate higher inflation. Jobless claims expectations are expected to show up at 235K. And so higher than that, we'll probably get a positive response in jobless claims. Higher PCE will indicate a negative response. It means higher inflation is not what we want. And with saying all that, you can see the market's actually starting to rip up right now. If you look above me right here, you can see we're actually approaching that previous closing price already. So yeah, we are well above the 200 EMA on the SPY here. You can see that right there. All right, so we did have challenger job cuts. They just came out at 76.835 thousand, 76.835 thousand. Year over year came in at 76.8%, 76.8%. Previous was 33.8%. And so that'll probably be that's being interpreted as positive. Again, more job cuts is better, I think, right now for inflation. And again, we talked about the nuance yesterday. Anything that causes more spending is going to be seen as a negative right now. So cutting jobs means what? It means less spending, and in turn, that it causes a positive response. You can actually see the SPY just ripped up and tapped that previous closing price level. And so in that way, the challenger job cuts being high is pushing the market up. I don't think it was 35K expected. I think it was 35K last time, right? Big difference though, so we had 35K last time for job cuts. We had 34K last job cut, challenger job cuts. There were no expectations that I'm seeing here for job cuts, but we did tap that previous closing price. Let's see if we can make it above that and go green on the day. That'd be interesting. Looking at our YouTube poll here, we did do a poll on YouTube. So we have about 360 votes, bullish or bearish on today's core PCE data. 58% are bullish, 42% are bearish on PCE. We also did a poll on Twitter, and we asked people, PCE data drops at 8:30, bullish or bearish. 52% said bullish, 48% said bearish here. So you can see the SPY starting to go green on the day here. Look at the SPY rip. Here's the previous closing price right here, this light blue line. Again, we'll see if we break over that. Not underneath that. We'll see if we break over that. If we do, again, we'll technically be green on the day. So again, let me know what you guys think. Amazon popping up. We're at almost $96 a share here. We got Disney up to almost 98 bucks. And yeah, we made a decent amount of money here. Let me look to see if we can monitor how much we've actually made. So let's look to see what we've made over the last few days in terms of just our basic trading. Let's look back at the last week of trading. We haven't made much in the last few days. All right, guys, SPY just went green on the day. Look at that. The SPY just popped up and went green on the day, actually, guys. That's crazy. How do I look at my actual profit and loss here? I see my account statement, but where's my actual PL? Like, it says I've made $20 over the last week, which is just not accurate. Okay. Okay, so there it is. We've made $166 in trading over the last week. Could be more. Let me see. So back at the last 30 days. Last 30 days in trading, we have made about 1,100. That's not bad. Honestly, that's what I always wanted, is to make, even if I could just make $1,000 a month in terms of swing trading. I'm very happy with that. Let's look back a little bit more. Let's look back at 90 days. How much we made over the last 90 days. Last 90 days, we have made about $2,300. We made about $1,500 on Disney alone in the last 90 days. So it kind of shows you what I actually make in terms of my swing trades. Let's look back at the last 6 months. We're up a little bit, you know. Now, what I really like to do is shoot for, like I said, last year we made money. But what I really like to shoot for, let's see what over the last day. We're up nothing over the last day. Let's see if we can go back 7. Okay, there we go. We're up a couple hundred over the last few days. So yeah, so SPY actually green. I wish there was a way for me to look online what my P&L was. Like total. A little bit green today, not the most green. We're in Disney right now, and again, I'm just sitting on 15 shares of Disney right now. I might sell a little bit here though, ahead of this data. So we're gonna take 5 shares off of Disney and just kind of lock in a little bit more profit. You know, I think that's okay. We're kind of, again, my sweet spot with Disney is buying it around 90s and then selling it as we move closer to 100. You know, I do it every time. I know PCE comes out at 8:30. It's 7:30 right now. I was right. Yeah, I have to scale up my size a little bit more. I make 15 an hour, work 2 jobs, have 0 every week. I've been looking for 3 years for something better and would quit in a heartbeat if I found something. Yeah, I think that the world is getting a little bit worse in terms of jobs. What I mean by that is, like, college is becoming the standard and it shouldn't be. You know, I think that certain career paths outside of just like manual labor don't require college. Like, if you look back historically, what people used to do is, to be an attorney, if you passed the bar, you could be an attorney. You know, you didn't have to go to a 6-year degree to be an attorney. That's not a job that you really need to do that for. You don't need a 6-year degree to become an attorney. And I know they always argue, oh, well, it tests your mental fortitude. And, like, that's fine. But, like, if you want actually effective attorneys, let them pass the bar and then let them apprentice under an actual attorney. That's going to be far more effective than going to a 6-year degree or getting some 6-year degree. It's unnecessary. It's just big, it's big education profiting is all it is, right? It'd be far more effective for you to actually just be an apprentice under somebody that's been an attorney for 20 years. You'd be a better attorney at the end of that if you were an apprentice for 4 years under a good, legitimate attorney than you would be for going to college for 6 years, you know? And so there's certain things that over time have made employment a little bit worse throughout the years. And of course, people that go to college, you know, confirmation bias. It's like, oh, well, college was worth it, you know, and that's true. It might be worth it for some things. Like, listen, doctors go to college, you know, and I still think going to college is, like, if you want to get a good job now, if you want to be in mathematics or be an attorney or be a doctor, you need to go to college now. But I'm disappointed they changed it from what it used to be, which was an apprentice system, and if you passed the bar and you became an apprentice, you could become an attorney. You know, I think that's a more effective way of learning than going putting your head in a book for 4 years. You know. Yesterday, I dropped 75,000 on Ape stock at 90 cents and sold at market close at 99. Made a cool 8K, broke even on my other short position, so I can't really complain. Hey, nice, Snow. Hey, congrats, man. Good trade, brother. Good trade, man. Just stick with net, you know. PC report. No, it comes out in about 8:30 at 8:30 Eastern Standard Time, so it comes out in about 50 minutes. Right, 100%. Irvin said, just subscribe to you to say that you are completely right about lawyers since I'm a lawyer myself, but theory without practice is more or less useless. 100%. That's my point. Like you could put your head in a book for 6 years, but you're going to be a far more effective attorney if you just apprentice under one, you know, like that used to be how you learn things, you know, somewhere throughout time, big education who are making 40,000 a student a semester, you know, in some places skew that towards what we have now, which, you know, again, I think the standard has also changed, 70 years ago, 60 years ago, everybody didn't go to college. The standard for everybody was not to go to college. Oh, hey. What? I don't have a charger. Mama said you won't. Oh, I do have a charger. Here you go. You can't have my brick or my box for it. You can have this. No, I need a box. Oh, no, I'm using my box. My daughter's moody right now, for sure. If PCE comes in lower, do you think the market will rise without a retest? Probably. Yeah, I mean, I make pretty good money, running a few different businesses, and I never went to college. And I had a lot of friends that went to college, and they're struggling right now, to be honest. I still think you should go to college. You're going to have a much more profound edge in life if you go to college. But like I said, I got a lot of friends that went to college, did everything right, got their 4-year, 6-year degree or whatever it is. And, now they're struggling to find work right now, and me who didn't go to college makes far more than they do, sitting at home talking about the stock market. You know what I mean? So I'm not saying college isn't useful. I think if you're a doctor, go to college. If you're a nurse, go to college. If you want to be in mathematics of any sort, like statistics or be any type of analyst, go to college. But I think just a broad business degree or a journalism degree, they're mostly useless. I think having any degree is going to be better than not having one, though, if I'm being honest as well. All right, guys. So again, SPY's consolidating. We're pretty neutral right here. So again, here's the previous close right here. Here's the SPY's range. We got the top, we got the bottom of this range here. And so again, we'll see if we actually break over under this range. We've been in this range for the last like 10 or 15 minutes. We start coming back down. That's going to be confirming bearish action today. We break over this and then we kind of hold and we continue to move it up. Then that's going to confirm bullish action. But again, a lot of people are waiting for the PCE to drop in about 45 minutes, give or take. So PCE comes out at about 45. We'll see if we get something good. All right, guys, Disney up there. Oh, for sure. It's certainly going to be more effective at life. You're going to have a far more distinct edge in life if you get a degree. I'm not arguing that. Like I said, I want my kids to go to college. Yeah, market flew up, Larry. Bro, she lost my earbuds. They're no more. They're gone. Yeah. Yeah, maybe so. You can start startups with your buddy. The networking is a big part of it for sure. But I think there's certain degrees that are useless. And I think 60 years ago, the standard wasn't to go to college. It wasn't for everybody to go. You know, nowadays, everybody wants everybody to go to college. And some people just aren't meant for that. I'm not, it doesn't mean they're less intelligent. It just means they're not meant to go to college. You know what I mean? So it's like, just, I think that's kind of made saturation. Disney at 98. We got the SPY down here. So again, SPY consolidating back and forth. Went green for a split second. Starting to dip down. You can see the dollar index, which is very relevant to everything going on as well, start to bounce up a little bit. So do have the dollar index start to pop. Yeah, I don't want my kids to go to LSU. Listen, I'm from Louisiana. I'm a huge LSU fan, of course. But I don't want my kids to go to LSU at all. Like, there's no chance that my kids are going to go to LSU. I'm not paying if they do. I'll put it that way. You know, and I love LSU. I truly do. Like, but I want my kids to go to A&M mostly. It's close to us. It's a better school in all honesty, and it's safer. Louisiana is my hometown, but I'd rather my daughter not go to LSU. I know Baton Rouge too well, you know. Yeah, for sure, Larry. Why no LSU? Because okay, so being from Baton Rouge, the area is pretty rough. Like where LSU is, the surrounding area is kind of rough. Like it's kind of a rough area. Number one, a lot of crime going on around there. Number two is that it's just out of state, and I'd rather my kid go in state. You know. Number three is that A&M is just a better school, better networking culture of you know, huge A&M network from people that go there, and so it's just those are my reasons for wanting her to go to A&M. But she'll go wherever she wants, really. That's what you get a scholarship, you go wherever you want. You know, if you're asking me to pay, or you know. All right, so the Dixie started to pull back down a little bit, and we do have the SPY bounce back up. The SPY's back up to 408. Yeah, she could go to Baylor. She could go to any Ivy League school, of course. I'd support that. All right, guys. Dixie pulling back down, starting to test the lows again. Disney up there. We got the SPY up there. Here's Tesla. Tesla up to 196.30s, 196.20s. All right, guys. We got 50 minutes. Here we got about 40 minutes until the actual data drops here. 40 minutes. A lot of stuff coming out today, too. We got PCE deflator. We got jobless claims numbers. A lot of stuff happening. CrowdStrike. Didn't CrowdStrike drop down substantially? I don't know. I don't like CrowdStrike. I don't know enough about it. It's up from yesterday's sympathy with the market, but I just don't know enough about CrowdStrike to really say yes or no. All right, guys. SPY up to 408. SPY at 408s here, 408s. Dixie just broke lows here. So you see the dollar index just broke the low of the last couple minutes. It's still not the low of the day, though. We still have this level right here if you guys want to see this. There's the Dixie low right there at 105.30s, 105.30s. Let me put the actual line up here. There's the low. Whatever happened to MMAT? I had a lot of people talk about MMAT. Still holding its gains over the last couple of minutes. Went to LSU briefly at 99, 98, 99 at Chelsea's. Bullish on oil stocks today? I don't know. Did he really? Me, Kevin started his own ETF. All right, so yeah, we're at Disney right now. Disney just tapped 98 bucks. Tesla up to 196 this year. AMC still down today at 720s here. AMC is my only hold. Should I just cut AMC? I don't know what to do with this. Yeah, for sure, Daniel, 100%, man. Yeah, I had to leave to grow up too. Like I left Baton Rouge probably 12 years ago. You know, a lot of friends that I know from back there they just haven't grown up, man. All right, so Neuralink aims to start putting its coin-sized brain implant into human patients within 6 months. Forbes top 30 under 30 has Almeida listed. All right, Disney's still pumping up here, and I'm still holding it. I took a little bit off. We're still holding 10 shares, though. And so, again, we'll see if we continue. What are some good Christmas present ideas for my son, guys? What are some gift ideas? My son's 8 years old. He'll be 9 in a couple months. So, what are some good gift ideas for my son? I'm watching this. The Lego Technics fishing trip with Dad. You can trade in pre-market. Right now it's pre-market. I can buy or sell right now if I want to. Red Rider, Rubik's Cube, nice book. He's into like Pokemon, video games, Minecraft. Gucci Seuss. All right, since 1950, stocks have rallied close to 80% of the time from Thanksgiving to the year end. Interesting. Yeah, I mean, well, we already have my daughter set up. She's already got basically her whole college stuff ready. And I told her, I said, if you get a scholarship, you get to keep it, you know. So she's doing well. You know, she'll be okay. My son, he's still young though, but that's what I told my daughter. I said, look, you get a scholarship, you get to keep your college money. And so hopefully she goes to college and hopefully she gets a scholarship. I'm pushing for like baseball. Softball, that is. No, he does Legos. He puts Legos together. He likes baseball, Pokemon, Minecraft. Yeah, baseball. That's basically his interest. Baseball, Pokemon, Minecraft, Legos. Yeah, hockey's tough. I played ice hockey as a kid. I wasn't great at it, but like I played as a kid. I played in Baton Rouge, if you guys remember the Kingfish. Well, like as a kid, I knew the coach's son, Bob McGill was his name. His son went to school with me. And so because of that, I played Pee-wee ice hockey. I was terrible at it, but I played Pee-wee ice hockey as a kid and I did all right. You know, hockey was fun. I could ice skate really well now. But tough sport, fun sport though. Never got into really watching hockey like that, but I played it when I was a kid. All right, guys. So the Dixie started to bounce back up, and you can kind of see there's a positive correlation right now with the SPY. Here's the SPY. On the left, here's the SPY. Here's the Dixie. So we got the SPY moving up. And then we also have the dollar index moving up here. So again, interesting. We got a positive correlation between the SPY and the dollar index right now. What do you guys think? I mean, we could look at the correlations here, but man, a positive correlation. Weird. We got about 30 minutes left. 30 minutes left. Yeah, so we got 30 minutes exactly, guys. 30 minutes exactly. I don't see anything else to trade. Again, I'm sitting at Disney. Here's Tesla right here on the right. We can look at Amazon, but there's the Dixie starting to move up some. I don't think the dollar is going to, I don't think the SPY is going to follow the dollar like that for very long. I think eventually we're going to see the negative correlation that we usually get with the dollar moving up and the SPY moving down. Yeah, Adam, you keep saying the same thing, so I'm just gonna ban you, man. Like, you've been saying the same thing over and over again for whatever reason. Like, so if you're just gonna come here and keep like attacking sponsors, I'm just gonna ban you, man. It's just useless to. Good day, sir. It's obviously not a scam. I mean, listen, and we'll use this as kind of a time to, you know, do a little pluggy plug. If you haven't already, checked out Top Step. What Top Step does is really simple. Okay, somebody said it's a scam. I'm going to explain why it's not. All right, number one, Top Step funds thousands of traders a year. They pay out millions of dollars every year in actual withdrawals. So, which means that they're paying out traders that are withdrawing their profits from them millions of dollars a year in withdrawals, millions. What Top Step is a challenge, right? The whole point of this challenge is to make you a better trader. Are some traders going to be able to live off of their funded account? Sure, but definitely not everybody. And what it really is doing is conditioning you to be a better trader. Some paper trading accounts cost $100, right? Now you can get that paper trading account. Like DOS is a good example. DOS paper trading costs like 100 and something bucks a month, right? Now Top Step, it gives you a demo account. And if you can hit the profit target on the demo account in futures while following the rest of their rules and conditions, then they fund you $50,000, the same amount as the paper account. And so it's a challenge account, but it reinforces rules and it makes you a better trader, in my opinion. That's the huge distinct edge that you get, is that it 100% made me a better trader, and it simply conditions you to be a better trader. It conditions you to follow rules, to not take huge swings where you're risking your account, and ultimately it builds a better trader version of yourself, in my opinion. That's the huge edge. The base package on Top Step is only 130 something if you use my link as well, so it's very cheap. And they have packages ranging from 50K up to over 100K. But again, you have to have reasonable expectations for it. It's a funded account program, which again, it's reinforcing the right things in trading, which are rules to follow, reasonable sizing. It's just going to teach you to be a better trader, in my opinion. There's also a ton of other resources that come with it. So like for 130 something bucks to get something like that, that's pretty reasonable, in my opinion. I think what happens is you got people that lose and that just aren't that great of traders, and so they lose, and that's okay. But instead of being like, hey man, I got to work on my trading and fix my trading, what do? Is they blame Top Step. You know, again, the sign of a mature trader is somebody that doesn't blame somebody else for their losses. And I think over time, you kind of realize that that's kind of what you need. Yeah, if you want to check it out, again, at the same time, though, I'm definitely biased in their favor because I get a commission if you sign up through me. So I'm definitely biased in their favor. But again, if you want to check them out, there's the link. Yeah, blaming Top Step is like blaming your broker for losses, 100%. All right, guys, we got 25 minutes. 25 minutes. The Dixie started to fall. The SPY is ripping up, which is really weird. Again, we got an inverse relation, or we got a positive correlation with the dollar, which you can see in the middle, and the SPY, which is the S&P 500 on the left here. So a positive correlation between the dollar and the SPY today, which is very strange right now. Very strange. Really interesting. We'll see if it continues, but very strange. Again, jobless claims today. We got PCE deflator today as well. So just kind of a really important day for release, especially when you consider how much the market is up. You know, the market is up big. The chart on the right is Amazon. All right, guys, look at the SPY fly up here. The dollar index is now coming down. So we do have an inverse relationship at this point in time, which is what we kind of want to see here. Again, we can look at Aapl on the right. Disney, we're still holding a piece of Disney on the right. You know, you can see AMC and all that stuff at 730. It's moving up a little bit this morning here. But yeah, Disney on the right, Amazon on the right, Google on the right. Everything pumping up. Google back up to over 100s here. And again, I've been telling people, where my buy zones are, and they've been incredibly accurate at this point in time. So, hey, we'll see if they can keep up. We got 25 minutes before jobless claims and PCE data. It's a big release day. And then tomorrow we have non-farm payroll numbers, which are pretty big as well. So yeah, Amazon on the right, Disney on the right, Tesla on the right. We'll see if we get anything good here today. Dollar index is starting to dip heavily here, rejected right around that 200 EMA. SPY is up to 408. Hey, man, how you doing, buddy? Hey, bro, it's cold outside today, I think, bud. Yeah, bro, it's 40 degrees, dude. You need to wear pants. Okay? You need to wear pants, bro. It's cold. All right? See that? Look, it's 39 degrees outside, buddy.
Yeah, but yesterday was 40 degrees.
40 degrees is cold, bro.
Yeah, but yesterday was 40 degrees and I was still wearing shorts.
I love you.
So
go put some pants on.
I could wear shorts now.
Here, I'll talk to your mom. All right? Love you, buddy. You brush your teeth today? All right, go brush your teeth, bro. All right, I love you, buddy. I love you, buddy.
Love you too.
Thank you, man. Have a good day, buddy. Listen, man, at least wear a jacket. Okay? It's cold outside, bud. Huh? All right, yeah. Put on a jacket, man. Love you, buddy. Kids, man. Yeah. Yeah, bro. I swear the kid is never cold. Like, he's never cold. We go out. I'm freezing cold out there. I'm like, Jack, put a jacket on. He's like, bro, it's not cold, daddy. I'm like, how are you not cold? All right, guys. The dollar index did dip under the 200 moving average, which is nice. Starting to fall here. SPY at 408s. Looking at our polls on Twitter here. We did do some polls on Twitter. 56% think bullish, 44% think bearish on Twitter. Let's look at our YouTube numbers. Yeah, we got about 600 votes. 60% are bullish, 40% are bearish. Yeah. Yeah, market's been rallying, Larry, for sure. Yeah, Dollar General earnings. What is that? DG? What's the stock? Yeah, DG. Yeah, I don't really watch Dollar General a ton. Dollar General posted worse than expected guidance. Third quarter EPS of 233 versus 208 a year ago. So yeah, bad guidance numbers, but market's still flying up. Tesla ripping up. SPY almost up to 408. Let me see what the high of the day is here. All right, so the high of the day is 408.70s. So right here is the high of the day for the market. These are big numbers. Yeah, 20 minutes. Listen, we got like 3 Xboxes. We got so many Xboxes here. My son just does not need an Xbox. I asked him what he wanted for Christmas. He said another Xbox. I said, Jack, dude, we've got like 3. We literally have an Xbox Series X, an Xbox Series S, and then another Xbox Series S. So we've got 3 new Xboxes here at this house. We don't even use them. We have one we just don't even use. And so, you know, I told him, I was like, don't just get an Xbox just to say it. Like, we already got Xboxes, bro. I gotta look up gift ideas for an 8-year-old. All right, guys. So, yeah. All right, guys. So again, Disney's still ripping up at 98.20s here. Market's finally starting to pull back some here. So again, we had this huge rip up over the previous closing price on the SPY, and now we're finally starting to pivot back a little bit. No, I don't trust him with that yet. Not yet. Yeah, so jobless claims expectations are for 235. If it's over 240, that'll be great for the market. The market will probably fly up. Yeah, for sure. Hey, thank you, Life. Yeah, we're going to pick somebody out over the next couple days. I don't know how I want to do it. I can either pick out the winner myself, or I can get a random person to pick the winner on Twitter. Dollar index is at 105.40s. SPY is at 408.20s. Tesla at 196s. Man, Disney's still moving up. SPY's starting to dip down a little, so we're starting to fall on the SPY here. The Dixie is at 105.37s. Whoa. All right, so food price inflation in Germany reaching 21% year over year here. Again, we got these numbers dropping in about 15 minutes. Yeah, for sure, Larry. That's probably what the idea is. Yeah, Disney ripping up highs here, man. Again, we're at Disney right now. Here's Disney. It's at 98.40s. All right, guys, we're at 408.20s here. The Dixie's at 105s. Disney at 98.30s. Data drops in about 15 minutes, guys. 15 minutes, y'all. Be ready. Freestyle on the beat, bro. To hear this voice of an angel, you're gonna have to pay. You're gonna, you gotta pay me for that. We're free unless you want to hear me freestyle. Too many names. Yeah, there's too many names for that. I want to make it completely random, though. Give me your ideas to make it random. Again, we're also going to put it in sub-only mode if you haven't already, guys. So we're going to put it in sub-only mode. So if you have not already, hit that subscribe button, hit the notification bell. Data drops in 15 minutes. All right, guys. So, yeah. Here's the data right here. Comes out in about 15 minutes exactly. We got over 600 people here. Hit that subscribe, hit the like, hit the notification bell. We appreciate you all. Thank you guys so much. Yeah, we already got 2 VR headsets, Peter. So we already got a bunch of VR headsets. Rumor says Apple is in talks of purchasing Disney. Really? Wow. That would be crazy if they did. This was already back in November. They were saying this. So Bob Iger is saying that, or Bob Iger, everybody said that could be a power move. I don't know. I don't think that's going to happen, though. So it would cost $275 billion to buy Disney. in that deal, Apple would reduce the dependence of its business on iPhone sales. I mean, I don't know. Disney up to $98. Again, we're still holding a little piece of this here ahead of the meeting. We've already taken most of our profit off. SPY still moving up. We're still not anywhere close to the previous high of the day, though. We still got some room to go before we actually hit that level. Hey, everybody announce yourself. Show us that you're subbed here. We appreciate you guys. Yes. Yeah, I don't know what to get my son. Yeah, but Pete, and I get it. You want the markets to go down. I saw you talking about this yesterday. But the big thing to understand is that the Fed uses the PCE data to gauge how inflation is right now. So it'll be a really important metric to watch. Because again, the Fed's going to use it to figure out how much inflation is and all that stuff, right? So because of that, it's just an important metric to watch. We'll see, though, you know. All right, guys. SPY starting to pump up a little bit, trying to break highs. The Dixie's still moving down, though. The lows of the day on Dixie are at 105.30s. Again, I think the move up. To be honest, I think the move up is a little bit extended. You know, I think the move up is a little bit extended. The reason I think it's extended is because while I think what he said yesterday was good, I don't know if it was this good. You know, and again, I'm a bull. I want the market to go up. I just don't know if we're gonna. It all is gonna be relative to what happens with jobless claims. Again, jobless claims are incredibly important. I'll give you guys the perspective of this morning. Jobless claims are incredibly important. All this data really is important because what this data is going to signal is how bad inflation problems are right now. Again, inflation problems are pretty rough, but higher jobless claims is going to be better for the market. Anything that adds to spending is going to be seen as worse, and we're going to have a negative stock market reaction from that. And so with that in mind, jobless claims release is incredibly important because, again, it's going to signify how much spending is going to be out there, right? The more people without work, the less spending there is. And even though I don't necessarily want that to happen, that does mean better movement for inflation. And vice versa. The less people out of work, the more spending, and the worse it's going to be for inflation. The other thing is the PCE data is what specifically Jerome Powell uses in terms of interpreting inflation. He mentioned it many times yesterday alone. Like yesterday, you know, JP did mention PCE, and he talked about how much they actually use PCE for their own data in terms of interpreting inflation. So it's a very important metric. If you don't know what PCE is, it is the personal consumption expenditures. It's basically how much people are spending on consumption. You know, and in that regard, expectations are for 0.3%, guys, 0.3%. We also have jobless claims numbers, which again are going to have a positive correlation with markets, right? So we get higher than expected jobless claims, which would conventionally be bad. That's probably going to make the market go up, and vice versa. If we get less expected initial jobless claims, it's probably going to make the market go down. And so for PCE, again, this is an inverse relationship. So we want to see this drop. You know, less is more with PCE right now in a time of high inflation. Again, just to read you the explanation of what PCE is, it measures the changes in price of goods and services purchased by consumers for the purchase of consumption, excluding food or energy. So remember, core PCE is the most important metric. Core PCE is the biggest one. Unlike the fixed weighted CPI, PCE is chain weighted and thus adjusts to changing consumer behavior. Core PCE is the Fed's preferred inflation measure and thus receives greater attention. And so again, PCE is the most important one. CPI has more eyes, to be honest. So CPI has more, like we get more people here for CPI, but PCE is what the Fed actually uses a little bit more. And so it's a very important metric that a lot of people sleep on, but very important metric. And again, we'll see if we get something good here for it. 10 minutes, guys, 10 minutes, Humberto. Yeah, Peter. Yeah, for sure. Glowing mist. A lot of people aren't suited to day trade, man. He doesn't want to try PlayStation or Switch. He has a Switch already. Listen, I'm a video game person. Dollar index just broke lows. Guys, so the Dixie just broke lows. All right, guys, so we're starting to press the high of the last 10 or 15 minutes here. We do have about 7.5, or we got about 8 minutes left until this data is released. Apple just went green on the day. Disney's still very green on the day. The Dixie just broke lows at the open of the dollar index here. So you can see we just broke lows on the open of the Dixie here. Again, we have about 8 minutes left. We got about 700 people here. Scott said, I think yesterday taught me that even if I feel like we should be bearish, you have to learn to evaluate your opinion on the market based on whatever info you get. 100%, man. Again, I see a lot of bears stay very, very stubborn. That it's like, even though Jerome Powell's saying they're going to ease the rate hikes relative to what we've been doing, even though the market's been flying up, a lot of people are just in disbelief. Confirmation bias is really strong in stocks. And so a lot of people just desperately want to see the market go down because they're taking really big gambling short positions, and everybody wants to be Michael Burry. But again, very few people are. A lot of people gamble on the short side. One thing I've noticed is that when people short, a lot of people just take way too big of size relative to their account. And again, if it's one of those things, if your heart's beating out your chest and if you have all these butterflies in your stomach, and really, if you're playing, to be honest, if you're playing these meetings anyway, like if you're trying to bet the sentiment of these meetings, it's a coin flip at best. It's gambling. It's straight up pure gambling, man. Like nobody knows what they're going to say during these meetings. Nobody knows what the rate hike is going to be. Nobody knows what the PCE data is going to be. You might have people that are right about their predictions, but it's nobody knows unless you have insider information. And so taking big size positions ahead of these things is incredibly risky. You never want to do it. There's no edge in that. Like it's straight up gamblers who would normally be putting it on roulette, putting money in the stock market, and in the end, I definitely discourage that. I think that's a terrible idea. I think regardless of whether you're right or wrong about one individual bet, that it's just a huge gamble. The only justifiable way is if you're taking very small size. That's understandable if you're taking very small size, or if you're taking like really far outside the money options that have a low probability of success and looking to play some big volatility that you get from the release. Those are all options that you can do in that situation, but it never should be something where you're risking your entire $1,000+ account on one trade by basically just picking a direction ahead of these releases. It's just a gamble. It's a coin flip. Like, go play roulette. Like, don't play the stock market, How can we achieve lower jobless claims when Powell wants to? It's not that he wants people to suffer. I mean, I think that the whole point of raising rates is to discourage spending, right? And so anything that causes spending is bad. It's not like he wants a lot of people just make him like the enemy, but he's got a really tough job. It's not just him. Like these decisions are all voted on by a number of different people. And so it's not like it's just JP over there just pushing people down, it's more so it's voted on by a number of different people, and it's relevant because you got to understand it's not just his fault. Like right now we're in a period of high inflation that he didn't really have anything to do with. You got people pulling for both sides. You got some people that want rates to be higher, so some people want rates to be lower. And regardless of any of that, it's a very difficult job to be in Powell's position, and so I don't envy him in that regard. Yeah, small straddle ahead of numbers release. That's fine too. Yeah, I'm not mad at anybody. What I'm saying is that if you're to the point where you're really nervous about a position, you're probably trading too large. Like everybody and again, if you're trading really, really large relative to your account size, then you're probably gambling, and that's not a healthy trading style. It's not going to work. I think part of it is, I think it's just a difficult thing, but yeah, it depends on your definition of gambling. If your definition of gambling is betting money, sure. If your definition of gambling is betting money with unfavorable odds, well, it depends on what you're doing. If you're betting on these big economic releases with huge sizing, then you're betting on unfavorable odds. Apple flying up. The market's ripping up as well, guys. We got about 3.5 minutes. 3.5 minutes before this data comes out. It's all about the drop. Yeah, so at 40840s. Yeah, react to moves. Don't try to predict these type of things. Well, there's a lot of reasons. Again, remember, guys, hit the live button next to the play button to make sure you're caught up. Every stream, we get a lot of people saying, this dude reported it 5 minutes late. It's like, no, you're just delayed on the stream. Make sure you hit this button, guys. Let me show you. All right, make sure you hit this button. Hit this button right here. Click this button to make sure you are caught up in live. Okay, click this button right here. It's the live button. It'll make sure that you're caught up in live. All right. Hit that button, guys. Hit the notification bell. We appreciate it. We're almost at 93,000 subscribers. We'll probably hit that today. But yeah, y'all subscribe. Hit the notification bell. Don't forget. Help me hit 93,000 subscribers. We'll probably hit that today. All right, guys. Aapl all the way up to 148.40s here. 148.40s here. So big movements up. Big movements up. SPY up to 408.40s. Disney up there. The Dixie's starting to finally bounce back a little bit here. Again, we got about 2 minutes. 2 minutes. Hey, thank you, Red. Yeah, I just try to be honest with people, guys. Again, I see a lot of people gambling in the market. I see a lot of people that gamble in the market, and I think that's one of the reasons it brings traders in. But just remember, just take a small size is a huge edge. Like being able to take your emotion out of it and trade small size. Like you can get big percentage moves. You can get a lot of stuff to make money. But just understand, like taking really large size is usually the way you should look at it is this. If you are really nervous and have butterflies in your stomach every time you're taking a trade, you're probably trading too large. Like profitable trading and reasonable size trading should be relatively emotionless, you know, to where it's like you're going to have some emotion, but it's not going to be like you're not going to faint out of stress, you know. We try. Oh, that's rough, Kieran. I'm sorry to hear that, brother. All right, we got over 900 here. We got about a minute left, guys. A minute left. Let's see what we get. Good luck. Let me refresh my page. We're getting ready to drop this. 2 minutes. Less than 2 minutes, really. Let's go. Good luck, guys. All right, guys. Less than a minute. Less than a minute. We will cover it as soon as it drops. Again, subscribe to chat. Less than a minute. Jobless claims expectations, 235K. PCE expectations. Core PCE is expected to come in at 0.3%. Anything over that is worse. Below that is better. Good luck. Let's do this. All right, guys, let's see how the market reacts. We got the dollar index in the middle. We got the SPY or the S&P 500 on the left side. And then we've got Disney on the right. Pulling back a little bit ahead of this data. About 10 seconds, guys. 10 seconds. All right, here we go. Data's about to drop right now. And here's the data. Let's see what it is. Waiting. 225K for jobless claims, much lower than expected. That'll evoke a negative response. 225K for jobless claims, over 235K expectations. Continuing claims came in higher than expected at 1.608 million versus 1.573 million expected. Waiting for the PCE data to show up. Let's see if we can find it somewhere else. Okay, there's the PCE. PCE came in at 0.2%, lower than expected, causing the market to rip. 0.2% lower than expected. Year over year came in as expected at 0.5 or at 5%, but 0.2%, 0.1% lower than expected. Jobless claims was released, but yeah, it came in at 0.2%, lower than expected for PCE core price index. Lower than expected, which is great. It's better for inflation, and the market is ripping up even more from this. Again, here's the data right here. We'll put the rest of the data up on screen. But there's the data. Again, we also have jobless claims come in at 225K versus 235K expected. So yeah, here's the main data right here. We'll put this up on screen. But yeah, 0.2% better than expected, higher than or lower than expected, which is great. I had a lot of other stuff. We had personal income come in at 0.7 versus 0.4%, so a little bit higher than expected. Personal spending came in on par with expectations at 8%. Year over year, the PCE price index came in at 6%. The regular PCE, so not core, but regular, came in 0.2% lower than expected as well at 0.3 versus 0.5% expected. But core PCE, which is the biggest and most watched one, the one that the Fed actually uses, came in at 0.2% versus 0.3% expectations. And the SPY is ripping up here. We're at 409s here. Well, we hit 410 today. 409s right now. So, wow. Huge movement up. It's mostly positive. The bigger release is PCE, right? Both PCE data came in lower than expected, core and regular. Jobless claims was mixed. Continuing claims came in higher than expected, which is interpreted as positive right now. But base initial claims, which is the more important one, came in lower than expected. So again, technically we're mixed, but the more important one came in positive, which is PCE. Both PCE metrics came in lower than expected, which is good for inflation. It means less inflation in terms of personal consumption than expected here, which is great. Again, basic core PCE came in at 0.2% month over month, which is great. Yearly core came in at 5%, which is on par. Regular PCE month over month came in at 0.3, and then basic year over year PCE came in at 6. All right, so we did come in better than expected for the most part with this data release. Market's flying up right now. Again, market hit 409s here, broke 409s, broke the highs of the day as well. Let's see if we hold. The previous high of the day level was 408.75s, 408.75s. This number up on Twitter if you haven't already. Put the number on the screen. Let's see if we break highs. We're at 409.40s, 409.50s. Market's doing good, man. Hey, you love to see it. Dixie just broke lows again. There's a dollar index breaking down here. It's at 105.08. See if we can break under 105. SPY still push it up here, which is nice. Disney didn't really react to this, which is kind of surprising. Markets are smarter than Powell. Hey. Markets starting to break highs at up to 409.60s. Bears are going to be really mad at this, man. Like I said, just don't be emotional, guys. Don't call names. Don't get mad, okay? It's nobody else's fault. All right? Markets fly it up. Listen, you should want that. You know, I get it. You got some put options or short positions, but listen, market's flying up. We're at 409.50s. The data is right here at the bottom. Right here at the bottom. Came in at 0.2% versus 0.3% expected, lower than expected. Previous was 0.5%, so lower than last time in PCE, lower than expected as well for core PCE. And jobless claims came in at 225K versus 235,000 expected. We just broke highs again. We're at 409.70s. 409.70s. All right, Apple up to 149. Up to 409.74s here. All right, Apple all the way up to 149. Disney's not really reacting much. You can see the Dixie just broke lows. We're almost under 105s right now. SPY up to 409. Let's see if we tap 410s here. But a huge bull run in the market, man. Huge bull run. Crazy, to be honest here. Huge bull run. Apple at 148.90s. 148.90s. Starting to dip down a little bit. The dollar index hit under 105s here. Hit 104.995. So, wow. Man, who knew this bull run would start, man? December 1st is here, man. Huge bull run so far the last couple of days. Yeah, you might be able to short it at the open, but it doesn't mean anything, you know? Like, even if we drop, I think we're pretty extended on the upside now. I think we'll probably drop at the opening bell, but that's only because we're up so much over the last few days, you know? And so unless we're going to drop from 410 all the way down to like 395 today, which is incredibly unlikely, you know, like I said, longs were right. Less than expected is good. It means lower inflation. These are inflation gauges, right? So less is better. Again, my Disney trade's doing pretty well. We're in 10 shares. Didn't really move up that much, but we made so much from it over the last couple of days. It doesn't matter. We made thousands on Disney this year. Man, look at Apple with a huge dip. And like I said, we're not holding Apple. We're flat. But a huge dip on Apple. I wonder what's going on here. That was a big drop. And again, I think we're probably a little extended on the upside now, in my opinion. I think we're up a little bit too much short term. All right, guys. Market's starting to pull back down. Dixie started to bounce back a little bit. I mean, is bad always good, or when is the turning point when bad economic news starts to be bad for the stock market? Today wasn't bad economic news. Again, the biggest release today was not jobless claims numbers. Like, yeah, jobless claims numbers were mixed, but they were mixed. One was good, one was bad, depending on how you interpret it. That it's true regardless of which way you look at it, though. In terms of actual PCE, lower inflation is conventionally and currently better. And so there's not really much nuance to that. Like, lower inflation is better right now. And so, right now, PC came in lower than expected, which is good. Dixie's pulling back down here, testing that low. All right, guys, so dollar index started to press down towards 105s here. Yeah, I gotta check some of these. All right, guys, so we're at 109.40s here, starting to rip back up. Dixie just broke lows. Yeah, data's right below me, guys. It's right here. Just a weatherman in, like, right here. Right around here, you might have the data. It's like, like right here, right in this area, right here, But yeah, in my opinion, we might be a little bit extended on the upside now. All right, guys. Well, let's see what we get. Starting to rip back up at 409.50s. Just took a position to Q. Good luck, guys. Yeah. Yeah, all good. I mean, if it's news, it's news, baller. It's all good, brother. If it's news, it's news. Also, guys, y'all check out Chart Prime. Prime Trading View Indicator Service, really useful. Let's talk about it for a second. Yeah, I'm gonna make the jobless claims data here on the screen. I'll put it at the bottom of the screen so you guys can see it no matter what. But let's talk about Chart Prime. Really useful indicator service. What they ultimately do is there's a crazy big sale going on right now. It gives you 40% off. You can use it on TradingView, which is a platform. You can use it in stocks, crypto, futures, Forex. Let's pull up Bitcoin right here because I think Bitcoin is one of the ones that I see it's the most accurate on. Like, look, check out how accurate this thing is. Like, let's just look at how much it was right, just not in terms of predictive algorithm, but also in terms of just basic candlesticks, right? So let's look at the candlestick identifier first. Crypto. In candlesticks, there can be a lot of cool stuff that you can see in candlesticks, right? Let's look at how accurate. Right about this one. Big run up afterwards. Right about this one. Big drop afterwards. Right about the bottom of this one. Big run up afterwards. Right about this one. Bounce afterwards. Right about this one. Solid drop afterwards. Right about this one. Drop over the next 5 to 10 minutes. Right about this one. Drop over the next 5 to 10 minutes. And so you can see how accurate these candlestick indicators are. But again, you can use it in stocks, crypto, Forex. It also has a predictive algorithm. Let's put the SPY up here, which is what I usually trade. Right? You can pull this up and you can look at the indicators. The real edge, in my opinion, here. So it was right about this one. It was wrong about these. But again, the real edge in terms of these indicators is using the Oracle as well. If you put up the Oracle here, you can use this. What I like to do, and I've talked about this many times, is I try to find multiple together at once, right? So I try to find a mix of the possible reversal up as well as the signs of the indicators. So right, here's a bullish engulfing and possible reversal up. And if you look at how right it was, these are usually pretty accurate if you combine them together, right? So after that, we got a nice little bounce. If we zoom out here, you get a nice little bounce up. Again, what I try to do is I try to find them all around the same spot. Look, here's another example. Here's a bearish engulfing and a possible reversal down. Really nice drop from that. Here's a possible reversal up. We get a really nice bounce. So again, it's called Chart Prime. They've got a ridiculous sale going on right now. If you want to check them out, you can click the banner at the bottom of the screen right now. But you can also check them out in the description. I'll put the link in the description. Again, you can use this in stocks, crypto, Forex, futures. Whatever you want to do it on, they have it on TradingView, and just a really cool service. They are a sponsor of mine, and so I'm definitely biased in their favor. But it's called Chart Prime. Check it out. Here's the link in chat right here. You get 20% off. Really, I think you get 40% off right now, which is a huge sale. So if you ever thought about using them, they're pretty cheap. They're not a super expensive they're not a super expensive service, and they're just giving you data that you wouldn't be able to see elsewhere on the chart. So yeah, right now they've got a big 40% off deal going on right now. 40% off. So again, check them out. Hey, nice Dallas. Yeah, short squeeze. Yeah, tomorrow we have non-farm payroll numbers. So tomorrow's big because we have non-farm numbers coming out. All right, guys, starting to dip down a little bit again. I think we might be a little bit extended in my opinion. No Santa this year. Nobody's gonna have cash or credit. Well, I mean, the Santa rally's already been here. I mean, look, again, people can say whatever they want about the market and opinions. That's fine. If you look at 90 days here, here's a 90-day chart. Let's look at a daily chart. Is the easiest way to explain it. We have been moving basically straight up since early October. All right, we have gone from 340s all the way to 407s, 410s at some points today. And so we have moved up a lot. We've basically we've been moving up basically since early October. It is now December. And so that sounds like a rally to me. Again, I get it shorts. Again, if you're doubling and tripling down on your positions on the short side, just be careful, you know. Yeah, I'm definitely not always a bull. I even posted today, I think we might be a little bit extended on the upside after this rally. I just think that we're up a lot relative to what happened. And tomorrow we do have non-farm numbers come out. But again, I just think we're a little bit up relative to, you know, what has been said. I think everything that's been said has been great so far. But in that regard, I think we might just be a little bit extended on the upside now. But maybe I'm wrong. I might be wrong. All right, guys, Apple's starting to turn here a little bit. I think Apple's getting some heat from one of their decisions about airdrops, right? We also had some stuff that come out that said Apple's production problems will likely will hit revenue. One of the analysts by Barron says. And so market's starting to turn here. Again, like I said, I thought we might be a little bit extended on the upside now. I just don't know. Well, here's the previous high of the day right here at 408.70s. So again, we'll see if we actually hold these levels now or what. Yeah, help me hit 93,000. We're pretty close. We need like 150 subs to hit 93. Or we only need about 120 now, actually, which we might hit it today. We'll see. Y'all hit that subscribe button if you haven't yet, guys. We appreciate the love and support, of course, as we always do. And yeah, y'all hit the sub button, hit the notification bell, guys. A lot of data getting dropped this week. Apple started to turn. Again, tomorrow we got non-farm numbers too, and we're going to cover the data just like we did right here on stream. Again, looking at our polls here, we can do another poll right now, and here's a great poll. Do we hold these gains over the last couple of days? We got about 1,000 votes on the PCE poll. Now the next poll we're going to get is, do we hold these gains? We hold the gains we put in over the last 3 days, guys, yes or no? Vote on the poll. All right, guys, market's starting to bounce up a little bit. You see, we broke under that previous high of the day. Now we bounced off the VWAP at 408.30s. Well, let's look at the poll. All right, so 55% of people think no, we do not hold the gains. 45% think yes, out of about 100 votes over the last minute. Again, let me know what you guys think. Do we hold the gains? Let me know. Dixie's starting to bounce back. Dollar starting to drop here. We got one of the Feds, Logan and Bowman, is speaking today as well. We also have manufacturing PMI in about an hour. So November manufacturing PMI and then the ISM manufacturing employment numbers dropped today as well. All right, so consolidating here, starting to pump back up here. Here's the previous high. We're still pretty green in the last day or two. Again, if we look at like a 10-day chart here, here's the last 10 days here. We have flown up over a 10-day period. We've gone from, again, 390 lows to 410 highs. No speeches tomorrow, but tomorrow we have non-farm payroll numbers dropping. So non-farm numbers drop tomorrow. Pretty important metric, you know, in terms of manufacturing numbers. And again, hit that sub button, guys. Help me hit 93,000. If you hit the subscribe button, we appreciate it. What we do here is we put out free content. We don't charge for anything. I got a lot of people that reach out to me trying to get me to sell a course or something like that. And again, I'm just not going to do it. Everything we put out there is free. I'm not going to have any paywalls behind any content. And I'm not even claiming to be a good trader or claiming to be an expert trader. I just want to create a free resource and community of traders who get together and help each other learn and grow. And so with that, subscribe if you haven't yet, guys. We certainly appreciate the love and support. All right, Telegram is going to build a crypto exchange and non-custodial wallets. All right, guys. So again, we are pulling back a little bit as we kind of just suggested here. Now, again, I don't know if we're going to hold the gains that we made, but we might. You can see Aapl trying to hold right over the green level here. So here's the light blue line on Aapl. It's the level at which it goes from green to red, red to green. We're right at that level now. You can see we got two down wicks that hit that level specifically here. So you can see we tapped that previous closing price on Aapl here. The previous closing price on the SPY is still pretty deep below us. So we're at 40760s here, 40760. So again, I don't know if we're going to hold or not. We do have some data dropping today outside of jobless claims and PCE, like we said. Specifically, we have, in a couple minutes, we have manufacturing. Or no. Yeah, we got manufacturing PMI for November, I believe here. Let me make sure. Yeah, so we have manufacturing PMI for November coming out in about 50 minutes or so. So, yeah, we have manufacturing PMI for November coming out in about 50 minutes. With that, it's coming out at 9:45, so about 15 minutes after the opening bell. And that way, you just be careful, guys. You know, this might influence markets. So if you're taking a big position in like day trading or something like that after the open, the expectations for manufacturing PMI for November are 47.6. 47.6. We also have Bowman and one of the Feds, Logan, speaking right now. And so because of all that, just be careful. Hey, thank you, Slew. Hey, thank you, Michael. Hey, thank you, Richard. Hey, nice, John. All right, Apple at 148.30. See your 148.30s. All right, guys. So, market is starting to rebound back up here. Dollar index is starting to bounce back. So this might cause some drops in the SPY here. Hey, John, have you ever noticed that when the news comes out, the market was headed in that direction, long or short, it just gets there faster? Not always. I mean, sometimes, and definitely on this instance, maybe, but not always. You know, sometimes we get like, again, it depends, man. It really depends. Like, the market's not always going to be heading in that direction, though. Like, sometimes we're going to get a complete reversal, and nobody really knows. It just kind of so happens that we had a little bit of understanding with this one, mostly because Powell said, yesterday that the PCE data was looking okay, right? So Powell came out yesterday and he referenced PCE multiple times during his speech yesterday, basically indicating that we might get positive data. And so I think especially in this instance with this specific release, I think we had a little bit more of understanding about what we might get, definitely more so relative to the previous releases like this. But this is not always like that. Sometimes it's a complete surprise and we go from moving up really big to just completely reversing. You know, I cover all these big releases. That definitely happens a percentage of the time as well. So with that, it's like, I don't think it's a good indication of what direction you should be taking. I still think it's just a coin flip in terms of figuring that out. Usually, maybe with this one being a slight exception, but still pretty risky. All right, guys. SPY at 408.60s here. We got the Dixie at 105s. We got Aapl at 148s. I don't know if we're sleeping. The market's been flying up today. Yesterday, over the last day at least, the market's been pretty green. Yeah, I need a haircut, man. You kind of see how curly. Like, I had the lady cut my hair, and per my wife's suggestion, I had her cut it a little bit shorter on the sides, but leave it on the top, and so you can kind of see how curly my hair is naturally. As I've gotten older, I haven't really liked it this way because, you know, honestly, it's just easier to keep in line. whenever it's short. But my wife likes the curls, and so I guess I'll keep it like this. But, you know, I look like a crazy person half the time if I take my hat off on stream, which is okay, I guess. Any news about the market just came? Yeah, core PCE came in lower than expected, which is good for inflation. It came in at 0.2% versus 0.3% expectations. Last time it was 0.5%, so it's lower than last time as well. Jobless claims came in a little bit lower than expected at 225 versus 235 expectations. So in the end, jobless claims came in mixed. PCE came in better than expected. And so far this morning, we've had a big rip up, especially with Jerome Powell yesterday. Jerome Powell said some optimistic things regarding rate hikes in the future. He said they're going to start easing into the rate hikes as well, which a lot of people thought he might get more aggressive. And so with that, we had a big reaction to the upside. The market is pumped up from really 394s, 393s yesterday, all the way up to 410 today. At some points in time, we're at 408.50s now, so the market's doing really well. The dollar index over the last couple minutes has been pretty neutral, but dollar index has dropped all the way down to 105s, which is pretty solid. Yeah, you know Francis. I mean, I don't really care about what, like I said, you hear a lot of people that are like, I just don't care what people think. It's like, y'all be quiet. Yeah, you do. Everybody cares what people think. I don't care who you are. You care what people think, you know? Like I said, if I was single and ladies like pink bunny suits, I'd rock a pink bunny suit all day, you know? I'd be pink bunny suiting it up if that's what girls were into when I was young, you know? And so, of course, we care what people think. We're biologically programmed to care what people think, you know? And so with that in mind, if Carol likes my hair long and curly, I'm going to keep it long and curly. Need Disca? Why the market's selling after PCE? Well, the market's not selling. We're green relative to when PCE came out. PCE came out here. You see, we came out about 408.25, so we came out about right here, and we are now at 408.70. So we're green relative to where we were before PCE came out. We're not super green. I mean, we're pulling back a little bit, but again, my guess is that we're just a little bit extended now. You know, we're just extended on the upside. We're up so much already. We're just extended. How about people who say, I told you so? Yeah, I mean, usually I have a very small amount of patience for those type of people. You get a lot of people here that, like, that they're just really desperate to say that, right? Usually those people get banned the fastest here. So just a warning, regardless of whether you're right or wrong. I mean, listen, if it's a longer term trade, you know, fine. You can say, I told you so. But it's one of those things where you get people who say, they give out like 5 or 6 predictions. And then they're wrong about like 4 of them. And then they're right about 1. And so they're really running about 20% accuracy. But boy, they never shut up about that one they're right about, you know. I just have a very small amount of patience for those. Because again, I just see it so much. It's just misleading. Market's starting to pump back up right now. It's at 409s. I mean, and this is coming from like the 3rd best trader in the world right now. So, you know my opinion's valid here. Of course. You know. We breathe validity over here, although we can't pronounce it very well. Yeah, Tyler. Hey, I'm not judging you, bro. Top 2 yesterday. Oh, yeah, Bill Ackman is supporting Sam Bankman-Fried right now. So he gets bumped out of that spot. So now we're top 2. Bill Ackman's like, say it, oh, Sam, I believe you. Bro, get Sam Fried out of here. Bill Ackman, you've been bumped down here. You're no longer top 3. You're now top 5, I guess. SPY up, though. SPY's up to 409s. We'll see if it holds. Aapl has gotten hit a little bit, but mostly following the market. The dollar index is pretty sideways here. We got a little bit of like a flag. Like, I like Thinkorswim, but this is what I hate about the charting here is that, like, it's not consistent. Like, I can drag here, and half the time it'll just skirt out. We do have kind of a triangle-like flag there. Kind of a symmetrical triangle, I guess. But I don't know if we're going to continue or what that means for the dollar index. Yeah, it's kind of crazy. How have your trades been the last few weeks? Day trades have been kind of neutral. I'm pretty break even. Swing trades have been all very profitable. Again, at Disney, I've made thousands on in the last couple months. If you look at Disney here, I can actually show you the trades and show you kind of what I do. Like I attack long ranges on a short-term basis. So like we can show my trades here on Disney on the right. So again, you can kind of see we ended up cutting a lot of Disney as we ran up yesterday. We ended up buying it down here at 95s, 94s, and just kind of selling it on the rip. Prior to that, you can see we started adding at 93s, 92s, 91s, and then we took most of it off at 100s. And so that's kind of my buy zone. Once we hit 90s, like low 90s, I started loading up like you can see here. And then we just take money off at the top. Same thing once we start to dip back down to 96s, 95s, 94s, we start to ride it up and sell towards the top. We've done that really, really effectively lately. John, what's your message for Michael Burry? I like Michael Burry, believe it or not. It might sound like I hate him, but I don't. I like Michael. I think he's a smart guy. I think the problem with Michael is that he's too busy trying to recreate his own thesis in terms of what happened in 2008. He's too busy trying to recreate that. And so he's just kind of always short. And he's been wrong a lot since the Big Short like call. You know what I mean? So it's like he's always trying to recreate what he did, but he's been wrong since then a lot. And so it's like, yeah, Burry's been, again, I get it, but like he's just been wrong so much now over the last like little bit that it's kind of hard to give him credit because he's always saying short, and then hasn't been right very much since the Big Short call in 2008. He just hasn't been right very much. I think what happens is like, and I see it a lot on YouTube as well. I see a lot of YouTubers talking about how how the market's gonna hit zero, and sorry, acid reflux. The market is zero, and they're talking about how the market's gonna crash. And I think a lot of influencers just get this really big ego, and so they think that they're just gonna call the next market crash. They all want to be Michael Burry because I think they understand if they call the market crash and then they're right, then they'll get publicity like Michael Burry, and it'll make them some big star, more so than they already are, so to speak, right? But I think it's very difficult to predict market crashes. And I think you're trading against the edge you have in markets trying to predict crashes like Michael Burry. I think every year, I've said this a bunch of times and I'll keep saying it, which is that every year you can look at what keywords are trending on YouTube. 2018 stock market crash, 2019 stock market crash, 2020 stock market crash, 21 stock market crash, 22 stock market crash, and none of them have been right. None of them have been right, except maybe arguably 2020, right? But even if they are finally right here, which they're not, they're still running 20% accuracy on their crash calls. And so it's like, in the end, I think at a certain point, you got to accept the fact that the market hasn't crashed like you guys wanted to, like a lot of bears wanted it to. And that's okay. Everybody's wrong sometimes. But I don't know. I think I'm negatively biased with them because it's like every time the market rips up, they get in here, they start calling people names. Like I bought Snapchat at like 780s. When I bought Snapchat after their earnings report, I had so many people just kind of get in my chat room and just call me all these names. They call me terrible names, saying I was dumb and I was crazy or whatever it was. And then within 3 or 4 days, Snapchat ripped up to like $10 a share, And so it kind of shows that like the people out here calling people names, the people out here criticizing other people's trades the most are usually the most wrong, and in the end, I just look for objective value. I'm not right about everything. But my swing trades I'm pretty accurate with. Again, I'll show you guys my swing trades. Here's Disney. Again, I can show you all my swing trades, really, if you guys want to see it. Here's Disney over a 90-day period. And I don't think I've had one losing Disney trade over 90 days. I might have, but I don't think I have. I've had one losing trade over the last 90 days on Disney. And if you guys want me to zoom into anything, I'll show you. This is just a big scale-in effort here at 100s. We scaled in. We took all of it off at the top when we finally ended green. We start to add towards the bottom. We take it off at the top. We add towards the bottom. We start to scale out of it. We add towards the bottom. We start to scale out of it at the top. And then this latest one was a little bit smaller scale. We add towards the bottom. We take it out towards the top. So just really accurate with my swing trades. Yeah, for sure. I heard Burry smile once. You're crazy? I mean, listen, I'm right most of the time. You know? Yeah, these are my trades pulled directly from the platform. I can't fake this, right? You could look back. You could look back at the last 6 months if you really want to. Here's the last year. I don't know that. I guess it won't work that way. Here's the last 180 days. All right, you can see how much swing trades I'm getting at it. And again, I've made money on almost every single one of these. I don't know. I think we're probably a little bit extended on the upside now, short term. I think we'll probably correct today during the open, but maybe not. Maybe not. I think during market hours today we'll probably drop. I think we're just up a little bit too much. It doesn't mean we're not going to continue up, but I think we're extended on the upside now with how much we've moved up over the last 2 days. I think we're just up a lot. I think it's a little bit extended in my opinion, but I might be wrong. Who knows? Maybe I'm wrong. Now it's hot in here, man. I got this fireplace I turned off, but it's hot. Yeah, I'm crazy. I'm top 3 craziest traders in the world. Most bulls trading during the largest Fed pumps in history, quantitative easing to the max, are still delusional that macro does not matter. I've traded in 3 echo cycles since 2000. You are a fast learner like dollar index. Yeah, I mean, listen, I don't think people can really criticize my swing trades. I've made money on the long side during a bear market, which is kind of hard to do. And so I'm excited about it. I need to scale up my size a little bit. I mean, we're making thousands a month or over 1,000 a month on swings mostly. But I do need to scale up my size. I think I have the opportunity now to take, some pretty solid trades and make some solid money. And I think if I had to critique myself, it's because I need to take larger size. But I mean, like I said, we're still making usually over 1,000 a month in swings so far, which I'm very happy with, All right, guys, we're also going to get ready to trade the futures market here. I mean, I do a little bit of both, though. I day trade, swing trade, and invest here. Like I said, a lot of people who are trying to find a reason to criticize me most of the time. Like, they're, for whatever reason, maybe they got banned and they're creating some alt account. Maybe they wanted to work with the channel and for whatever reason, they just kind of rubbed me the wrong way, so I didn't want to work with them or whatever it is, right? They try to really harp on my day trading, but it's like, look, I'm not claiming to be an expert day trader. The channel's called Beginner Trading. Like, we're just a resource and community. Like, that's all we are. I day trade, swing trade, and invest. And again, in terms of my capital gains, I made money last year. That's all I really say. I don't really need to say anything else. And so with day trading, I love day trading, but day trading is not for everybody. It's not meant for everybody. Everybody shouldn't day trade. Some people are going to be better suited towards investing or swing trading, and that's okay. I think people romanticize day trading heavily because I get it. It's exciting and it's the shortest term form of trading, but it's incredibly difficult. Most people lose at it. So, but I mean, you can do it. I think if you're going to day trade, instead of putting up 10 or 20,000 yourself, just try a funded account program like Top Step. It's the most reasonable way to do it. You have some pressure to succeed, but if you lose it, you're not losing your account. You're not losing tens of thousands of dollars or thousands of dollars. You're just risking 100 and something bucks. You got some pressure to succeed, but not all the pressure of like risking your own real account. You know what I mean? And that's the thing. When you think about it in that way, it makes tons of sense. And so, yeah. All right, let's get ready. But if you want to try out Top Step, I'll post the link here if you want to check out Top Step. Again, it's a funded account program. They pay out millions, fund thousands of traders a year. Here's the link. They are a sponsor of mine. Definitely biased in their favor. Right, exactly. If we're talking about numbers, I'm green. I don't ever remember saying that Dixie had no correlation to the markets. What I might have said was that that particular day, the Dixie had no correlation because sometimes, because what Chart Prime shows me is the correlation on that specific day. But yeah, I mean, over time, there's definitely an inverse correlation with the SPY in the dollar index, especially right now with inflation. So yeah, of course, there's a correlation there. You know, I think what you're probably hearing is a couple days ago, I might have said, there's not really much of a correlation today, or there might not be a correlation right now, but there's definitely still a correlation. You know, there's usually a correlation, at least, not always. Hey, thank you, Dirt Bike. The data's already dropped, Kentucky. They were pretty important, not just for market reaction, but for what the Fed uses to gauge inflation. PCE deflator is what the Fed uses a lot of the time, and to a big degree, the Fed uses the PCE deflator heavily in terms of identifying potential inflationary problems. And so with that, it's incredibly important in that regard. In terms of reaction, we didn't get the biggest reaction. We moved some, but we're somewhat neutral since the release. Again, my guess is that we're just so extended on the upside from Jerome Powell press conference yesterday that we're just extended on the upside now, that it's hard to make us go up more. And it's one of the reasons I think we're probably going to drop today. Maybe I'm wrong, though. I very easily could be wrong. We might just fly up. I mean, listen, in terms of momentum, I think we're on the upside. But in terms of extension, I think we're on the downside. Or I think we're extended on the upside. It potentially might correct. But again, let me know what you guys think. Why are influence telling people to save cash when the market is going down? I don't know who's telling them that. I mean, I don't know. A lot of people are, like I said, I see a lot of influencers are telling people the market's going to hit zero and like all this ridiculous stuff. And again, I think when you're in my position, and a lot of people are much larger than me, of course, but I think it can definitely boost your ego some. It definitely takes a toll on my ego for sure. I mean, you know, you guys know me. I'm top 3 best trader in the world. Obviously being sarcastic, but yeah, I think you get a lot of people that want to be the next Michael Burry. And so you get a lot of really big crash predictions. And when they're wrong, instead of being like, hey, I was wrong, they're worried it's going to hurt their brand. And so they double down on it and continue to kind of say that until hopefully we eventually crash in their opinion. But you know, I don't know. I don't know if we're going to crash. We might. Like I said, I don't know anything. We might crash. I don't know. Right now, we're definitely not, though. Market's moving up. Michael Burry said he's mega short. Do you really want to be him? No, I'm not Michael Burry. I haven't been, like, if anybody watches this stream, I'm mostly a bull. Like, I'm cautiously optimistic. Everybody always asks me what I think is going to happen. And one of the things I usually say is that I'm cautiously optimistic. I hope we go up, but I have no idea if we will. So I wouldn't really call myself a Michael Burry wannabe. You know, I'm not really making these big, bold crash predictions. You know, it's just not really my style of trading, really. I've been making money on the long side mostly. I day trade short, but longer term bets, mostly long. Well, I mean, I think what he said, SJ, yesterday made sense in terms of like what he said yesterday was that there's 2 options that we have for potentially combating inflation. One of those options is that we could rip the Band-Aid off and just do a really aggressive period of really aggressive rate hikes. And again, aggressive is relative. Some people think we're aggressive now, and conventionally we are. But one of the options is just really aggressively raising rates and kind of crashing the market and then playing cleanup from that. That's an option, and I think that's what a lot of bears wanted. But yesterday, specifically, he said that he wasn't going to do that. He said that they were going to instead start easing rate hikes and try to, combat inflation, because we are seeing some optimistic signs regarding inflation. We're still nowhere near where we need to be, but he said that he'd rather slow and steady rate hikes as opposed to just big dramatic rate hikes causing crashes and then having to play cleanup. If I'm looking at it objectively, I think he just doesn't want to crash under his watch, even if the latter might be a more effective way of combating inflation, arguably. But again, he doesn't want to crash under his term. That's what it seems like to me. And again, I get it. I'm not saying I would do anything different if I was him. I don't know. But yeah, that's basically why the market ripped up. Of course, we're still in a period of really high inflation relative to convention, but at the same time, we are starting to see some damage. PPI came in lower than expected. PCE just dropped, came in lower than expected. PPI, CPI came in lower than expected in the last rate high, during the last releases in November. And so all those things are optimistic signs. What's going to be a true tell of where we're at currently is what we do on December 14th in terms of rate hike decisions, whether it's going to be 50 or 75. I think are the only two options, or what we're going to show for CPI. And then PPI that week is generally it's that week on the 13th. So 13th of December, we have CPI. And then on the 14th, we have the rate hike. That's really going to tell us what we're like, where we're headed into the holiday, of Christmas. So. All right, market pop it up. Again, we got about 5 minutes. John is a bull. He's just what's not known yet in the market as a chicken bull. Maybe, bro. You're in the top 3 of people in the top 3. Oh, 100%. People that are listening to Michael Burry are hurting right now for sure. Yeah, I want the market to go up. I mean, I'm not crazy. I want to see the market go up. Market going down and crashing has a lot of unrecognized consequences that bears don't really want to look at. So it's like I don't want to see the market go down. But at the same time, there is an argument for it's not that they want to see the market go down. It's more so that they want it to be realistic so that we don't get an even more brutal drop sometime in the future. And I can understand that viewpoint as well. I really do. All right, guys, opening bells in about 4 minutes. 4 minutes. Apple dipping down ahead of the opening bell, pulling back to that previous closing price. Again, we got the micro E-mini up there at almost 4100s on the S&P 500. Yeah, but the market's always been about mass psychology. One thing that Limitless movie had right was that the market's about mass psychology, not actual company health. Right? So it's not about how the company's actually doing. It's how the company is interpreted as doing by the masses. It's always been that way. If not, the market movement would be directly pegged to the earnings results of companies as opposed to buys and sells. All right, so the Kroger CEO says they do not have a substantial update on the Albertsons merger at this time, and they still expect to close early in 2024. Sideways action ahead of this. Disney still at 98. I'm still holding a little bit of that. All right, guys, 2 minutes. 2 minutes. Again, y'all do me a favor, hit the subscribe button. We only need about 100 subscribers left to hit 93K. We're pretty close. We'll hit that at least tomorrow. Apple just popped right up at that 148, 200 moving average, volume weighted average price area. So Apple moving up a little bit. We'll see if that drags the market up with it. Okay, so market's starting to head up. We got about a minute left here, about a minute left. All right, guys. So all right, guys, 20 seconds. Good luck today, team. Five seconds. All right, here's the opening bell, guys. So far today, we have a little bit of sideways action at the opening bell. Big drop at the opening bell so far. Not a huge drop, but a big drop somewhat. Started to pull back a little bit again. We're going to sit back and wait here. Big red action at the opening bell. I mean, listen. We'll see if we hold down there. Again, we'll short the market right here a little bit. A little bit riskier than what we normally do. We're going to take one contract here and keep it small. See if we flush at the volume weighted average price, which we're not. There, we'll cut that. We'll get out a little $10 loss. I wanted to see if we rejected the volume weighted average price, and we didn't. Hey, what's up, Tiny? Hey, good morning. Looks too much like a red to green move for me to be confident in this. Apple's kind of breaking down, though. All right, pump it up to 409s. Like I said, looks too much like a red to green move for me. Yeah, Tesla dropping, Apple dropping mostly. All right, so a little bit of a red to green move here. Buy this little dip, see if we get a pop. Maybe ride the green action in the market up a little bit here. Small size. Two contracts. Yeah, I don't like this at all, so I'm going to cut it. And we'll wait now. Probably took a little bit too early of trading here. I think we're probably a little too extended to really take sizable long positions. I don't know. PMI will affect it to a certain extent. How much, we don't know. But the ISM manufacturing numbers will be somewhat relevant. Apple started to rebound back up here. All right, so we're kind of consolidating in a neutral range. The good news, though, is we do have a little bit of a sideways trend to attack here. Holding at the volume weighted average price, so we'll see if we pop up. All right, so again, we're pretty neutral. We're just kind of waiting here. Bowman says that the headline and core inflation have slowed but remains unacceptably high. Expects ongoing rate hikes. Still have a lot to do, but appropriate to slow pace of increases. All right, so here's what the Fed Bowman said. This is basically what Jerome Powell said yesterday as well here. Yeah, that could move the market some. To how much, we don't know. But yeah, this is basically what Bowman said. You can see it right now. They said that headline and core inflation slowed but remains unacceptably high. They expect ongoing rate hikes. Still have a lot to do, but appropriate to slow paces of increases. But yeah, that's basically what they said yesterday, what Jerome Powell said yesterday. All right, market's starting to turn. I missed the drop, bro. I was just about to get into this drop. I completely missed it. Ugh. I like the drop, though. I think we'll probably move down to test lows, but I completely missed the drop. I got in just a little bit too late, just a second too late. Take another short position here. Take 3 contracts. See if we reject the previous high level here. Over VWAP, we'll probably cut this and just wait. Hopefully we get a rejection here, though. We're looking for a rejection. I like that upwick. That upwick looks weak. Would have loved to get it a little bit higher up on my short, because that's where I really wanted to enter here. I just was a little bit too late. I like the trade, though. I mean, this trade looks good. I think we'll probably break down and test lows, hopefully, but you never know. Yeah, now we're reversing all the way back up here. So, yeah, we're going to have to cut it. Market's just so neutral, man. Getting stuck in the chop again. Like I said, the opening bell has been some of the worst trading that we have had in months, you know, which is kind of surprising. Usually, like during the winter holidays, we get a little bit better action than this. Little bear trap right there, which is what it did. And then we actually broke down in my direction. But regardless, we'll get a little bit of a range break here, hopefully. Still down like $60 or something on the day. Not a ton, or 75 maybe. Try to scale into a short position on these low breaks. Right at the bottom range. 3 contracts. Again, I think we're extending on the upside, which is why we're taking short positions here. I want to kind of scale it to a short position. I like this setup. We're right around the top of the range. So I'm trying to see if we get you a range break. Like the big up wick. Might scale it to a little bit more. There we go. We're in 7 contracts. Ideally, we want to flush back down here and a break of lows. See if we get a flush down. There's a break, slightly green. We tap the bottom. There we go. Dude, we didn't break lows. We kind of tapped the bottom here. Again, I still want to give it time to break, but that hurts. I'm going to give it time, though. We do have 2 kind of wick candles, like doji-looking candles. We start tapping this high, though, we're going to have to consider cutting it. And again, the market's just so neutral right now. See, man, I try to take big size, but the market is just not favorable. It's to the point where I might have to kind of stop trading as much. Oh, wait, we're still in 2 contracts. We're not down a ton, though. I mean, we're okay. But just another really choppy neutral day at the opening bell. I'm just hoping, like, really, somebody said this yesterday. It might be something where if I look at trading, I might have to kind of slow my trading down, like, heavily at the open. Because the opening bell, if you really go back and look at the opening bell over the last like 3 weeks, it's just been so neutral, man. It's been so choppy. Like, I could wait for range breaks, and like that's good. The reason I took short positions here though is because I think we're a little bit extended on the upside. Luckily, we're making so much money on our swing trades, or I'd be like super discouraged with trading as a whole. And it looks like cutting it was the right move there, but we might rejected the volume weighted average price here. But yeah, just kind of a neutral, boring, choppy day, man. So far, it doesn't mean we're not going to break out of this range, but like I said, luckily I've been making so much money on the upside in my swing trades. Hey, thank you, John. Yeah, for sure. And that's all good. I mean, the market's not always perfect. It's one of those things where, like, I think on this combine, I'm down like $300 or something like that. Not a lot. But it's just kind of like you try to be patient as you can. But sometimes the market's just not fun, you know. We still got a chance to trade today. I'm not done trading by any means. But I think I really got to just wait and let the range break. We also have PMI coming out here, so let's talk about it. We got manufacturing PMI dropping right now. It just came out at 49.6, guys. 49.6 is what the manufacturing PMI just came. Or no, I'm sorry. That was Canadian manufacturing. Our manufacturing drops in about 30 seconds. And so we'll see how that influences markets. But yeah, our manufacturing PMI for November comes out in about 25 seconds right now. And the market's starting to rip up a little bit from it. So let's see we'll cover it as soon as it drops, and we'll talk about it on stream as well. Think the news will be bad for us? I really don't know. I think we're extended on the upside right now. I think we've gone up so much over the last couple days that like I think we're due for a correction on the downside. But I might be right. Like I said, I might be wrong here. I have no idea what we're gonna get really. But yeah, here's the data drop. Manufacturing PMI came in at 47.7, slightly above average. Slightly above expectations. So 47.7 is what we showed up for manufacturing PMI. We still have the ISM manufacturing PMI for November coming out in 15 minutes, but this one came in at 47.7 for November. 47.7, so a little bit higher than expected, which means that we're in a contractionary manufacturing market, but we're contracting less than expected. Over 50 means expansive manufacturing market. Below 50 means contractionary manufacturing market, and so we're still below 50, but we're higher than expected, which is, I guess, being interpreted as positive right now. We're starting to move up. Yeah, and again, you can kind of see the range we drew here. Yeah, 100%. Yeah, for sure, pawn. And like I said, man, I've been day trading mostly for years. Usually, okay, so here's the real edge you get on markets, right? So like generally, you're gonna have more trend days than chop days, right? In markets, right? Like say we're looking at the SPY or the S&P 500. Normally, we're gonna have more trend days, like more days where the market's actually following a trend. Regardless of whether it's up or down, like a bullish or bearish trend, most days we're going to get a trend, and then every like 20 to 30% of days we're going to get chop. Lately, we've had a majority of choppy days, especially in the first 2 hours after the opening bell. Like a lot of the time you get choppy trends in the first 10 minutes, right? But lately it's been choppy trends mostly up to the first 2 hours after the opening bell. Now, hopefully we start to test this top and break out on the upside, but it's been a really choppy market. And what this actually means is that some sectors are up and some sectors are down. That's why we're so choppy. I mean, it also means lower volume usually, but it also means like sometimes it can mean like tech is up, but retail is down, you know, or healthcare is up, but, you know, auto is down, or whatever you want to look at it, right? So different sectors are up and down, and that causes neutral trends, which is kind of what we're getting right now. Like Aapl is green, and that's kind of dragging the market up. Tesla is somewhat green. Disney's starting to rip back up as well. What's red on the day though? I guess nothing's really red right now. The market's starting to test the top. Hey, have a good day, Eric. Yeah, no worries. Yeah, mostly the market looks bullish right now. Disney's starting to break highs, Apple breaking highs. And so we'll pivot to a long trade. But again, here's the range that we drew earlier, and we're just still in that range. Disney started to tap over highs, though. All right, the U.S. EPA proposes to increase 23 renewable fuel blending obligations to 20.82 billion gallons. Previous was 20.63. 25 increased to 22.68 billion. All right, Disney tapping highs, breaking highs right now. Hey, what's up, Jeanette? All right, so SPY started to test highs. Looks good. We're testing the top of that range here. And I can basically bet, like if I bought right here, for instance, right, I can say, hey, I think the market's going to hold here and run. The problem, though, is in that way is like if the market doesn't run, like if the market comes right back down and does that, then I'm going to lose. And so I think with this, you got to wait for the range to break. So you got to wait for this range to break. And then you can either buy this pullback or look to buy following pullbacks afterwards. Either way, in this current market, it's risky, but I'm not taking any positions until we get a clean range break. Yes, we'll see what the ISM is saying. Yeah, thank you, Adam. Yeah, I mean, like I said, I'm all good. Again, it's a really good dynamic for me where it's like I make so much swing trading that like my day trading, I'm less stressed about if I don't make money. And I think that's a big edge that you'll have. I think a lot of people put all their eggs in one basket, so to speak, not just with like day trading versus swing or invest trading, but with trading as a whole, right? Like I make money in other ways outside of trading to where it's like I don't need to succeed at trading to be happy or make money or pay bills. But it's the same thing with trading. Like I make enough money swing trading to where I'm green regardless, regardless of what I do in day trading. There's the break. So we got the break on the upside. Again, 9 minutes before we get the ISM data drop. Market's about to hit the high from yesterday too. High of pre-market is 409.74s. So high of pre-market is way over here. Finally starting to break in some direction though. Disney started to dip down a little bit. So SPY is testing highs right now. We're gonna buy this dip. How's a good way to learn swing trading? Paper trade. Paper trade first. Maybe take a month or two in paper trade, swing trades, figure out your time frame, figure out the strategies you use. Understand extension. Extension is my biggest money maker in markets. All right, so we got a little green trade in the book, so we just made 15 bucks. We'll add some more if we drop down some more. All right, guys, we got 7 minutes before the ISM data drops. Yeah, I don't know. I'm in a little long position, but that's a big up wick that just showed up. I could add more to this and take 3 contracts, or I could just leave it at 2. I think I'll probably leave it at 2. Use this level as a risk, and then if we dip down here, maybe we'll consider buying up some more, but break even on this trade so far. Again, we got 5 minutes, less than 5 minutes really before this data comes out. All right, so we're starting to creep up here. Again, we're kind of neutral on the trade. We're green, but not by much. Got out half there. All right, we're in 4 contracts here. I want to see if we get a quick little pop up. I'll try to cut it fast. Got out half there. Cut out the rest there. Made about 20 something, 25 bucks. Still in Disney right now, making money on my Disney swing too. I think I figured out my sizing too. All right, so we're right under that previous high of the day here. I'd like to see if we test that. Now, there's 4 contracts. Are we going to the moon, bro? I don't know. No idea. Kind of neutral in the last few days or trades. We'll let this try to work. We got this low down here that we can use as a risk, but yeah, we're gonna cut it. Sheesh, man, that little down wick right when I sold. Strange. But yeah, it just might not be the day for my trading. Yeah, we might actually get some good action here. Here goes the ISM manufacturing numbers. We'll see if those show up favorable and give me something better, but we're down less than $200 today, so it's still a pretty small day. Just hasn't been great for momentum trading at the open. We might get some good action here from the ISM numbers, but I still think we're probably like longer term, not long term, but I think longer term extension, we're still on the upside. We're extended on the upside. We'll probably correct a little bit too. ISM numbers in like 12 minutes. I don't know if it's going to be good or bad. Nobody does. All right, here's the data drop right now, guys. Let's see what it shows up as. Expectations are for 49.8. We showed up at 49. So this is actually good for markets. Yeah, this is good for markets. We showed up at 49, higher than expected, which means, or lower than expected, which is good for inflation, right? It's going to cause better inflationary numbers. We came in at 49 even. 49 even versus 49.8 expected here. Put this number up on screen. This is going to be better for most people. Are going to interpret it as better for inflation. And so far, we did rip up on this data. You can see it right there. But market's reversing big. ISM prices came in well below expectations as well. Construction spending was on par with expectation. So I guess the market's interpreting this as negative. I would think they might interpret it as positive because of higher inflation, which means that contracting manufacturing sector is better for inflation. But there's the correction on the downside. All right, but yeah, so I'm not going to trade this right now. We're just going to sit. But you see the numbers on the bottom of the screen right underneath me if you want to check it out. Yeah, maybe Fuji. I'm not sure, brother. Maybe. All right, market just broke lows. So yeah, ISM manufacturing PMI is the lowest level since the pandemic began. Since the recovery began. So I think this is probably, I would think this might be interpreted as positive right now for inflation, but we're dropping, which is interesting. Oil's dropping down. Yeah, y'all be careful. Markets start to turn again. I think I've said it a bunch of times. I think we're still probably extended short term on the upside, and I think we'll correct to the downside some, at least today during the open. But that's why I had the initial short bias at the open, is because I thought we might correct down some. I'm going to take one contract here, just one. I know it's risky, just because I think there's a chance that we might get big volatility on the downside because of the extension. What do you guys think? You think we're going to go in green or red today? Let me look at a poll. Did I do a poll for this earlier? We asked people, do we hold the gains? 53% said no. Yes. 47% said no. Yeah, tomorrow we have non-farm numbers. It'll be interesting. Yeah, you can see the ISM data at the bottom here. Flat tomorrow, red. Yeah, non-farm numbers are going to be really indicative of future strength and movement here. Yeah, vote on the poll if you guys have an idea about what we're going to do. I really don't know what we're going to get. Since we're a little green here, I'm going to add to this. We've taken such small size today that even with like a few losses, we're still not down as bad as we could be, you know? There we go. All right, so we just made 20 something on that trade just now. Made a little bit of money back. We caught the short position that we wanted. Again, yeah, pawn. Honestly, with my trades lately, maybe so, bro. And really with the whole market today just being kind of indecisive. Yeah, there it goes. There's the rip. So we made 20 bucks, gave it completely back fast. You know. We'll give it time. I mean, this up wick looks still pretty weak. Or weak. I said wick. Let's see if we reverse and break lows. We're back to close to break even on the trade. Well, so far the day isn't good. Usually we end up breaking in one direction though, and there we go. Like we're starting to break. All right, got out half. What the heck is going on here, bro? What? I'm so confused. I was trying to cover a position that it said was there. Oh, dude. Oh, man, I'm so confused, man. This platform is weird sometimes. It asks me if I'm sure. I'm trying to close a stop position, or a limit order that didn't get filled. When I closed the limit order, apparently it closes the whole trade, which is what I was trying to do with the limit order in the first place. You know, like what is it? I don't understand. Here, we're gonna start shorting here because we're close to the previous closing price, but at least we made money on the trade. We did it in green on the trade, but like could have made more there. That's all right. All right, we're right at the previous closing price, so I think we might get a pop here. Top three. Yeah, my day trades have been garbage lately. Like I said, luckily we've been making thousands a month swing trading, so my day trading, yeah, you know, we'll be all right. Yeah, so there's the pop. I really want to short into this, but with the choppy market, I'm just not confident in shorting into it. I would short it. All right, let's see if we test the previous closing price. All right, we got out the rest there too. So making money on the breakdown here as it drops. I told you guys we'd probably correct on the downside today. Now, I don't know if we'll continue, but in the end, it's just based off of extension. Like I said, my swing trades have been just on point, though. You know, making money net is going to heal a lot of wounds. Day trading's been kind of choppy and neutral and kind of boring. So we've been trading small and you know, we're okay there. Our swing trades have really been where we've been making money. Disney, we made a bunch of money over the last day. Called that one out. Again, if we look at Disney here, we bought last Disney trade at like 94s 2 days ago. We just sold a lot more at 98s, 99s. The time before that, we bought it at 91, sold at 100. We bought Amazon a few days ago at like 94 or something like that. Sold it at about 96 yesterday. So made money on that one. Still in Disney too, so still riding that one up. All right, there is the market breaking under the previous close. Yeah, I don't know. I don't remember anything about what anybody said. I've been mostly saying since before the opening bell that we were probably extended on the upside. Said that like 7 or 8 times. And so I'm not surprised to see us break it down. Chat can verify that I've been saying that. No offense, I just don't remember anything about what you said. I get a lot of people saying a lot of different things, brother. So I hope you understand. Nothing against you. I just get so many different people saying so many different things on a regular basis. Again, I don't think this drop is necessarily terrible. I mean, here's a great example, okay? If you look at my Twitter page, an hour ago, before the opening bell, I posted at 8:12 market time. So before the open, I said, hey, in my opinion, we are a little extended on the upside short term. Thoughts? So you can see exactly what I posted it. I posted it at 7:38 my time. 7:38 my time, which is 8:38 market time. So it's about 45 minutes before the opening bell. I posted this, which has said we are a little extended on the upside short term, which means that like we'll probably correct back down. If you look at where we were when I posted this, which is we were right here. So when I posted this, we were right here. So that is where I posted it, right there. All right, so you can kind of see it like this, and this is how I make money in my swing trades, guys, is I analyze extension. You know, I look for a level where it's like, okay, we're up too much short term. Like, where's objective value? Where's objective extension? And then when we're up too much, I try to capitalize on it. Now, I didn't really make money day trading today, but that's not really what I make money on with this type of trading strategy. What I make money on with this type of trading strategy is my swing trades. And my swing trades have been incredibly accurate. I'll probably cut the rest of my Disney trade now, speaking of my swing trades, because we're up so much already. But my swing trades have been incredibly accurate. We're now flat in our swings. We made money on Amazon, Disney over the last couple of days. And I would say I've probably gotten into at least 15 or 20 swing trades over the last 6 months. I think, or maybe the last 4 months, we'll call it. I think I've had to make money out of those 15 or 20, at least like 13 out of those 20. At least 13 to 15 out of 20, or I would say maybe better percentages than that, over 75% maybe. And again, the system all boils down to just basic extension. Extension can make you money. It's really something where you got to ignore both sides. Like, you got to ignore for the longs just being unrealistic, saying the market's going to keep going up forever, and you got to ignore the shorts who are saying the market's going to crash every little small dip. You know, you got to just kind of tune all of those out. And then just look for objective extension. So like, have we gone up for 2 days in a row? What it really is looking for is overreactions. And so I love using this with earnings, where a company will have like mixed or good earnings, and then they'll fall 10% or 20%. I did it with Amazon during their last Amazon earnings report like a month or two ago. Amazon dropped literally 20% with mixed results in their earnings, right? I bought it up afterwards. I made, within a day or two, it bounced back 10%. So very, very fast. So you're kind of using that extension and those overreactions to take really quick. Like, I usually only hold for maybe a week, maybe less than that. Sometimes it's overnight. Sometimes it's the same day. But like, using it like that, it can give me a really accurate swing trading system. And that's kind of what we've been doing. Mostly that's what we've been making money on. All right, so getting a little pop up. Again, the market's looking pretty red. Dixie's at 104. Is it really? Let me see. And again, I mean, this is a funded account program on Top Step anyway. And so if you want to be in this challenge with me, this is a company called Top Step. They are a funded account program in futures. What they do is they give you a demo. And if you can hit the target on their demo and pass their challenge, then they legitimately fund you 50,000 up to 150,000 with a 90% split once you're funded. And so they basically test you. And these tests are going to make you a better trader. They're very cheap. Some paper trading accounts cost $100. DOS, for instance, DOS paper trading costs $160 or whatever it is. And so what these do is they give you a demo and they give you rules to follow. And if you can follow their rules and hit their profit target on the demo, then they legitimately fund you. And this is a company that's regulated by the Chicago Mercantile Exchange. They pay out millions, fund thousands of traders a year. And they're called Top Step. They are a sponsor of my video. But again, you can kind of see I'm in this one right here. But the 50K package, it's only like 130 something a month. If you use my link, you get 20% off. So you only have to hit 3,000 in profit without losing 2,000 total, right? Which is a very reasonable ratio. Having to hit 3K without losing 2K is pretty reasonable. Now, there's some other rules with contract sizing and daily loss limits, and there's two different phases. But again, they're the most legitimate funded account program in the world. If you look at this, they pay out millions every year. They paid out over 7 million in actual withdrawals since 2020. They fund hundreds of traders a month. Been around for over a decade. Process payouts within 7 hours. And so again, if you want to check them out, great way to help support the channel. They're called Top Step. Here's the link. With that said, I'm probably going to slow it down. We do have some bearish action on the day. But I got some stuff I got to do today in the market, or not outside the market. So another place to check out, we'll talk about our sponsors real quick. Another sponsor of mine is called Chart Prime. Chart Prime, really useful service. What I've noticed, S&P 500, Steph, I'm going to assume you're trolling and just ban you, man, pretty quickly. Now, if you're being serious, my apologies, but yeah, man. These are just sponsors of my video. Everything we do is free. We don't sell a course or a service ourselves, so we put out stuff for free every day. But yeah, so regardless, check out Chart Prime. Chart Prime is really useful. I'll show you what you use it on. Here's Bitcoin right here. And what you'll notice is that these candlestick indicators are actually really profitable in Bitcoin. Right here. And again, I can't guarantee you're going to make money, but like, look at this. Here's a bearish engulfing and possible reversal down signal. And then look at the huge drop you get in Bitcoin. You can also use it in stocks, crypto, Forex, futures. If I put the SPY up here, which is what I usually trade, you know, you can see, look at all these bearish engulfing candles signaling this potential drop we might get. Look at that big drop we get. And so again, you can use these to identify momentum. It's called Chart Prime. They got a crazy amount of sales going on right now. And this is a very cheap service. It's not expensive at all. Very cheap. You can use it in stocks, crypto, futures. You can check out the link right there, but I'll post this link here as well. They got like a 40% off sale going on for the holidays. If you want to check it out, here's the link. You can also find both of these links in the description if you're interested in checking those out as well. But yeah, guys, love you all. Y'all stay safe in the market. Again, pretty fun day, man. We made a lot of money in our swing trading, and we were actually right about the downward extension that we had. Again, we talked about how the market would probably fall today since the opening bell. Let me get this thing out the way. We talked about how the market would probably drop today about an hour or two ago, and we were definitely right about it. Market has basically fallen since we said that for the most part. Now, again, you look at the SPY, you look at the dollar index here. Let me get these out the way. Look at the dollar index starting to bounce back here as well. So the dollar index is starting to move back. The SPY is mostly fallen. And again, I'm not going to say I told you guys so, but we kind of did. I mean, look, we are a little extended on the upside short term. We said this at 8:38 market time. So we said this literally right here. Let's find it. We said this right here is when we said this. So again, I'm not saying I'm the top 3 best trader of all time. I'm not saying that. I would never say that, but I'm definitely top 3 best trader of all time. Love you all. Y'all stay safe. I'll see you guys tomorrow.